midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their throne, checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Sanctuary and awe, it's blending. Mind on fire, never ending. Dreams of gold, relentless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
What's up, everybody? Let's go. Morning. Hit that like button, y'all. Oh, let's get busy. Y'all ready for it? Y'all ready for this? I feel like I'm out of breath and running up down the stairs. Woo. Morning, chat. What's up? Howdy, Simon Dean. Good morning, Patty. Good morning, MPHD, Ian Options DJ, and Patty Jim, Bot Yacht Club, Bull to the Bullish Daily Profiler, Bruce, Sean, Stu, or Pickle outside the door, Dom, Suckface. When you guys are gonna make like names, because I read off all the names in the roll call, you're gonna have to make some like funny names. I shouldn't say on stream sometimes. I bet. Dom, Nathan, Maddie, Kevin, Chad. Matthias, ATD, New Life Pictures, Yandro, Kevin, New Life Pictures again. Hey, what's up? Sayudia, Sam, Full Tilt, Gary, Trader, Jerry J, and Frank. Good morning. And Lee. Good morning. Good morning. Good morning. Good morning. What's up, y'all? What is up? All right, guys. Take a look what's going on. We had pre-market move up, supporting monthly hedge pressure pretty much all night. Got really close to the pivot. Kind of like, you know, sitting here pretty, still on the elevated move from the upside, you know, trajectory from the trade war potential resolves and things with China. So we'll see if this bull market continues. I don't expect, remember when I showed you guys, I'll show you on the stream some examples of this. There's a lot of people waiting for a pullback. There's a lot of people already calling tops. I'm going to tell you something. The market's going straight up to all-time highs. That's barely going to stop. We may get lucky to have a red day in the middle for those people advantageously waiting a pullback. I'm going to be very clear. The only bad news we had that brought us out of all-time highs was that the trade war stuff. Now, it's still there. It's still tariffs. There's still a little bit. But the panic is gone and earnings are good. And that's really all that matters. And Fed might be cutting rates this year because CPI is down in the low twos again. So Wall Street's forward thinking. Wall Street's not past thinking. A lot of the newbie traders out there are past thinking. They're thinking tariff, trade war, market's got to come down. Let them think that. All right, you wake up and you be smart. You're on this stream because you want to be smart. Let's do this. All right, check out the fun deals we got going on right now. 30% off Tradeify. That's kind of like really the big one. 30% off Take Profit. That's also a big one. You guys are really big fans of them. And also Fund to Next, the newest firm on the list. We're very picky on who we work with. I just removed top one from the list. We're no longer ever going to be talking about them, but just letting you guys know, we're very picky. We introduce you to who I find to be the highest integrity and worthwhile for your time, money, and my opinion. So find the next newest one added. They're a end of the day drawdown, DCA allowed, which I thought was crazy. DCA allowed, end of the day drawdown. No activation fee, no monthly fee. It's a one-time payment. I thought that was pretty cool already. And then, of course, once you pass, I got 6 of those things now. It's uncapped payouts, and I'm just blown away. It said uncapped payouts, sign me up. That's what I want. So I'm trading my Tradeifys and I'm trading my Button X together. Those are the 2 I'm working on now. Who got removed? Top one. It was strike 4 for me. Some of the recent shenanigans. So I never made a sale with them, thank God. So I never even talked about it to begin with. But no, good luck to them. But we're not going to support their business practices. I sense a fast track coming along, right? So this is like my spidey sense. I can predict the stock market. I can predict when somebody's business model is bad. Ooh, ooh, ooh. 13 profit day 1 on your funded next. So Bruce, that's it, right? 1300 because your consistency, right? You're basically right on the edge there. Crushing it, dude. Good job, good job, good job. So let's discuss pre-market, right? We've got 2 really strong yellow lines and a red line kind of right here in the middle. These are interrupt pivots for the entirety of the day we have. I'll tell you guys, I don't think that we're going to be selling off today. There's a lot of, again, allow me to remind you of what the market has been known to do. I remember this. Well, come on. Allow me to indulge for a hot minute here. Okay. Some past history of the stock market, shall we? Now, this goes back to like my early days of streaming. I kind of remember this like it was yesterday. Let me go back into... Oh, I'd say it was probably 2017. Yeah, that's it. Let's pop up SPY. Maybe not. Actually, let's do ES futures. You can see the whole full thing. So the market has been known to become like really stupid at times, especially when you have like these breakouts and rallies. There's a lot of people, if you guys remember, I don't know if you guys were trading back in 2018. I was. Let me tell you something. There is... I hear pickle outside. There's a time when the market was consolidating. Everybody thought it was going to sell off, right? And remember, bullish stupidity is just crazy. How much the market can be bullish and people are finally going to be bullish. We have no bear news, period. Minor tariffs around the world is not going to crash the market. Market's going to keep going higher on other good economic data. But I remember in these days, like the market went up, and then up to like 25, 50, and people are like, oh God, that's it. This market's got to come down. Look at, how all-time highs and then some. And then the market consolidated for like a little bit and crept up and then popped at the end. One red day, and people thought that's it, the market's going to crash. And then what happened was it went up and up and up and up, and it was flat. And it went up further, and then kind of was flat, and then up further, and then it was like, okay, this has got to be it. This has got to be the top. It hasn't pulled back. We haven't had a correction. We were calling correction from like 2,400. Now it's 2,700. That's like 12% higher. The market consolidated here and sold off, and people said, that's it. Market's dead. Okay. Let me tell you something. That was the start of one of the biggest rallies I'd ever seen in my life. I go through this exercise to show people this, and then it sold off. But it's like, imagine that you were just like trying to short here and got burned, trying to short here and got burned. And then the market finally rocketed. This is the fastest rally I've ever seen in my life, my trading career. And it's better when I go through the motions of showing you what it was like. Okay. You're like trying to short, you get squeezed. Trying to short, get squeezed. Trying to short, got squeezed. Trying to short, got squeezed. All right, you know what? This is finally it. Months of trying to short this. That's it. I knew I was right. Blah, 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 blah. Watch this. And it's like, okay, it's going up. It's going up. Crap. It's going up. Crap. It's going up. It's going up. It's got to come down. Oh no, it's still going up. It's still going up. Okay, it's sold off at the end of the day. Finally, tomorrow's the day. It's sold off at the end of the day. I'm taking the short. It's at my Fibonacci extension. Okay. Whew, I made money. Oh wait, no. I'm upside down again. What the heck? Oh my God. That's gotta be it. This is when I fell on the floor. You guys remember, we've done this before, right? I fell on the floor and I got scared when I did the same act last time. But it's like the market can be as stupid as it wants to be and as fast as it wants to be. And then, then it finally crashed out and then it kind of rallied up. So, the idea is don't try to pick tops. Wall Street's telling you it's bullish. Trump's telling you to buy the dip. Let the market tell you whatever. Market sold off yesterday. It's here, it's here, it's here, it's here, it's here. Then it hit monthly hedge pressure overnight. Those of you might say, oh man, it's already rallied so much, it's got to sell off. And I don't know how many people here were buying down at the dip if you were up this morning, grabbing the dip and longing, right? This is kind of how it goes. I'm going to follow the rules. Hold on. Pickle. Buddy. Come on. All right. You can stay here today. IDOC will be home in a couple hours, but stop whining outside. No barking. Come here. You can sit up here. Stay put. Shaved pickle, man. I know. He shaved. Look. Maybe it's not gonna be so crazy because she's not here, but look. Oh my God, boy. Let me look at my glasses. My boy. So she shaved him. I know he's like such short hair now. Hey, bro. Now here's the test. Normally he tries to jump out of my hands, but that's because she's here. Now that she's gone. Holy scratches. He's always like scratch my belly. Look, this is like his favorite thing ever. Like that. All right, you gotta work. You're about to shave your pickle too. That's helpful. It makes it look bigger, Pickle, watch out. Less chafing when you run, Manscaped. You want it to look an inch longer? Trim it up. He's ready for the race again. No, he's still gonna run in circles. He's still kind of like, he still doesn't get it. We'll have to practice with him, but yeah, we entered him to a wiener dog race. He got like dead second to dead last, so poor guy. What do we got here? Okay. All right. But point is, I'm saying is, when the market has a bull setup, I'm going to take my bull setup and take my bull setup and take my bull setup. And I'm going to take it every single day until the day it doesn't work. And then the next day, I'm going to keep taking it. I'm going to keep taking it until the market flips bearish. The market will tell you when it's bearish. You guys know the rule. We have this thing called greater market, right? Greater market. Okay, so greater market is our three indicators we'll teach you in the boot camp. Tell me if the market's bullish or bearish. Oh, are you trying to get on the desk, boy? Number one, are the stocks bullish or bearish? And they're going to absolutely be bullish. Okay, so number one, already bullish. SPY above MHP? Absolutely, because we've been above MHP. There's no reason we would be below it if we've been above it. As we get closer to expiration, which actually is, in 2 days, MHP will be in the vicinity of where we're trading, but we're likely not to be below it at the open of the day. And then monthly maps are absolutely bullish. Okay. All three things of these are bullish. Buddy, it's lonely, huh? She'll be home in an hour. Needy dog. Sit here with me. Dude, he's got crazy separation anxiety. Dachshunds are like super emotional dogs. They're needy. They can be mean. They can be. They're basically emo teenagers, but they're great. You love that I know what you're doing and actually teaching instead of showing us your Lambo. I know. Showing people your Lambo is a way to attract the idiots and the kids. A kid that... Who's at my door? Oh, I think iDoc is here. Hold on. Let me go grab her. Hold on. All right. Ah, my house is too big. That's actually the housekeeper here for day 2. I'd actually be here in about an hour. Ooh. Lambo win. Let me tell you my dream car. I'm gonna buy one of those very soon. Hold on, let me show you. Find it real quick. Oh, I don't have it in here. Let me post it real quick. Let me show you guys my dream car. You guys are gonna love it. So tired. Freaking house is so big, the housekeeper got to come 2 days to do it all. So I ran downstairs thinking she was locked out of the house, but it was just the housekeeper for day 2. Let me show you guys. Y'all want to see this? Okay. No, people that show Lambos and stuff, they just want... Look, the only person that's attracted to that is a young kid. Older folks are like, I want money to do real stuff with. Younger folks are like, I want money so I can have a Lambo so people think I'm rich and cool. And none of them will ever get it. You won't ever get it. You're definitely not going to get it following somebody like that. But they don't care. They do it for fun. They know that I call it trader porn. They know that stuff brings in the viewers. Viewers will use affiliate codes and they'll make a ton of money. They'll have a ton of Lambos. And it's kind of like the way the industry is. But here you guys are going to actually learn something. All right, y'all want to see my car? Check it out. And I want this color. I want everything. So I actually was seriously thinking about buying this. Because Aston Martin has brought back the Vanquish. And I never thought I would love the color brown, the bronze color. But take a look at this. Ooh, baby. Ooh, look at this. Look it up. Let me explain something to you. I never thought brown or any color, dark color. How much is this? About 500, give or take. 450, 500. Dude, okay, hold on. I mean, let's see if we can see the front of this. Yeah. So basically, it's like bronze wheels, bronze car with a black stripe on the top. Oh. Aston Martin. Yeah. V12 Vanquish. The Vanquish is gone for a while and they just brought it back. So the James Bond car. But like I walked in there just to look at him because she was looking to get the Aston Martin SUV. So we actually might pull the trigger on the SUV this year. But while we were there, I was like, the guy's like, yeah, we brought the Vanquish back. I'm like, I know, I'm going to come check it out. So he had one that somebody had custom ordered. So basically they don't have any on the floor. You got to custom order it. And this belonged to somebody that had ordered it. But this is the colors they picked. And I was like, dude, I wouldn't be this. I'd be the second person in my town with the same. Oh, actually, no. This is shipped to New Jersey. So there's only 2 Aston Martin dealerships in the country right now that actually are have Vanquishes. So they just came back, and this is one of them. This is the oldest Aston dealership in the country, the one in Houston. And so this is for a guy in Jersey. But I'm like, man, I want that so sick. Bronze with bronze wheels. I don't know. I never thought I would like a brownish color car. But oh, that's hot. Oh, that's hot. So whatever it is, I thought it was cool as shit. But I drove the SUV around, and it's got like 600 or 700 horsepower, and by far was one of the fastest things I've ever driven in. That SUV was like, it's like lifting off the ground like an airplane. I was like, okay, I was like, damn, all right, this is nice. I go, can I drive the Vanquish? He's like, well, technically that belongs to somebody else. So, he's like, no. And I was like, damn it. But, yeah, so that's my quote unquote Lambo if I was going to get a sports car. But I drive I've always driven 4-door cars because I'm more of a practical person. I'm a Texan, you know. So this was this was like 3 cars ago. So I used to have a Porsche. So I have practical cars that are really nice. Now, again, I get my cars all souped up and fixed up. So I had a Panamera. This is probably 2017, 2018. This is where I had my house. And I'll tell you a funny story about this. So I don't normally brag about my cars and stuff. You guys know I don't forward that. I show my stats instead. But yeah, this is my car. And so I got like the wheels dipped white, like as black as the tint can go. And that was my other car, like 3 cars ago. But I lived in an apartment at the time. This is probably 10 years ago. And this is how bougie I was. I bought, you know, you could buy a parking spot at your apartment. Well, I actually bought 3 parking spots. I paid a monthly fee for 3 parking spots. Just so nobody would park on either side of me. That's me. That's the way I am. So my car always had a spot to the left and right of it that I was always having to chase people out of. Then every once in a while, my friends or my neighbors would park there and I'd be cool with it. But the 3 spots right near the door I bought. So that's how I am in my life. I reserve 3 spots for 1 car. And so in an apartment, usually you only reserve like the front 2 or 3 spots by the elevator. So, yeah, that's how I am. So, but I'm not usually like all over my Twitter, check out my car, you know. The car has more parking spots than most families. Also because I wanted to make sure that when I got out of the car with like groceries and stuff, I didn't have to like squeeze in between 2 cars in an apartment complex. I'm just like, you know, I get all this space. That way my friends would come over. I would also have parking spots for them to park in. So basically, I don't know, I probably paid $60 a month. So I probably paid, what, $180 a month for 3 parking spots. But then my friends could use them when they'd come over. You know, that's the flex. But anywho, that was a couple years after I went full-time trading, right about the time I started streaming. So, you know, like I said, I made a pretty decent chunk of money, you know, shorting oil when the oil market crashed. So parking spot back in France, about 20K a pop. Oh my God. So anyways, yeah, look at the people that showed their Lambos and stuff, and that's cool. That's their bag. But somebody said, thank you for actually teaching us. And I'm glad that you guys are learning something. I tell you, I take extreme passion in teaching. That's what I love to do. My boot camp makes me the least money of any of the ventures I do. And it's my favorite thing I do. Speaking of, day 2 of the boot camp. You guys enjoying it? How much should I make average year from trading? No affiliates, no sponsors. It just depends on the year. Almost always 6 figures, you know, many times 7 figures, you know. Trading's not a $10 million a year gig, not for the risk I'm taking, but Trading is a substantial salary for me. I think this year I'm already up. Shoot. Probably already up maybe $250,000, a little bit more this year from all I made. I mean, I made some pretty substantial trades this year. Like if I make $1 million a year by trading, I'm happy. Like if I make it 200,000 a year by trading, I'm happy. Trading's just extra money. But I've had like really good years, like year after year after year, for the last probably since Rocket Scooter came out. My win rate's been really high, and I've been basically doing very well. So, if trading was like a 10 or 20 million a year gig, that would be awesome. But unless you're like managing large amounts of money, when you're day trading, there's kind of a limit at which you will want to risk and want to do, for sure. What's my main job? Well, day trading is my main job. But also I'm the CEO of the Rocket Scooter company. So I built a trading platform. That's the main job. I built Rocket Place, which is a trader marketplace that's a competitor to WAP, which is better than WAP because it's free. But basically I built this website for trading vendors and people to host their education and tools and stuff. We have automated Discord roles and all of that. So I built this. So I'm a developer. I run a tech company. I'm a day trader. I invest in people and businesses. I'm about to open we've been talking about opening a pickleball place and a boba shop. So I do a lot of everything. But yeah, so my main job has always been trader. Before that, I was a chemical engineer. Right there on the wall. I've been day trading full-time since 2015. I've been day trading total since 2010. So I went through a 5-year journey of like sucking at this too. Don't worry, you guys. If you're like, God, I'm not making any money. God, trading's so hard. Ask yourself what year you're on. And then you say, man, that guy Matt that I see on YouTube, it took him like 5 years to quit his job and do this. Okay, that has hope. You might say like, I think Matt's like the best trader I've ever seen in my entire life. Well, then remember this. It took me 5 years to get there. To get consistent enough to do it full time. To have Porsche with 3 parking spot money. Okay. So like 5 years. So if you're on like year 1 or 6 months and you're like, God, I'm just going to give up. This sucks. Don't be a pussy. Okay. Grind it out, baby. 5 years. Don't be like Generation Z, Generation Alpha, where it's like you're not making $1 million within a month. It's like your parents buy you a guitar. You can't play a song. It goes under your bed forever. Look, grind it out. It's a long process. But even me, wasn't easy for me at the start. I had a lot of emotional things to get over. Here you go. Took your year to pass your first prop firm, and that's a success in my book. You guys are all learning faster than I ever did because y'all have a lot of opportunities in front of you, educators and good stuff. But there's also a lot of trash out there. And most people that just front their cars and front their money, they're mostly not selling you anything but just a dream, and you're willing to just throw money at them because they're doing well. I think people that do that are never going to succeed at trading. But you guys, y'all have a flying chance because y'all are like, I want to learn something. Thesis today, all 3 of the greater market signals are likely to be up. The market's likely to still be up. I never think anything other than up, 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 unless the market does go down and breaks key pivots. And I said, okay, we're out, right? So in this mode today, we're opening inside of the green DD bands. I've got a lot of lines on here. Let me delete some of these. Nice and stable, nice and stable. We're inside of the 2 bands on NASDAQ as well. This is the old, actually, let me just recycle these. I'll use those later. So inside of the green bands, 88% of days stay inside the bands. Remember, just like yesterday. You guys remember yesterday's stream? Y'all remember? Let me reiterate, right? I took a long out the door from like here to here and closed out. And then the market ran up to there. And then everybody's like, chase along, chase along, chase along. I'm like, yeah, but we have this band. It was a DD band, was literally right there. And I just said, now I'm going to sit out because the R&R is not that good. And then the market just kind of inched forward, and then dipped at the end of the day. Had I longed here at the end, I would have walked away with pretty much nothing unless I closed out. So as you see, I wasn't missing out on thousands of points of rally, right? We usually don't bet that we break outside of those bands. And by the end of the day, everyone was like, you know, messaging me in Discord, like, wow, man, that's such discipline. You sat out and didn't chase it. I would have longed at the end of the day. And then, so remember, I know what I'm doing. I still lose trades. You know, I still don't win every trade, but I'm patient enough to know what matters and what makes sense. So here we're opening inside of the middle of the range. 88% of days will close inside of these green bands, according to our back test. Get this out of the way here. So basically it's a toss up. 88% or 4% of days will close above, 88% of days will close in the middle, and only 8% of days will close underneath the bands. So here is always a strong long setup. Off of monthly hedge pressure is always a strong long setup to some pivot. This happens about 90% of the time. This happens 92% of the time. Okay. So at least out the door, I know if the market were to sell down in here, and we got some lucky red day in the middle of that possible, 20 or 30 or 40 days of green we might have in the next 2 months. Any red, I'm buying the dip. Until circumstances change, I'm buying the dip, buying the dip, buying the dip, buying the dip. Do you hear me? What am I doing? I'm buying the dip, buying the dip, buying the dip, buying the dip. How long should it take someone learning from me since I've made this new system? I would say on average, most people that come through Rocket Scooter within about 1 month or 2 months already are improving something, whatever it may be. It doesn't take long these days because the tools are there to teach. The reason it took me so long because there was no tools to learn. Everything I tried to learn was like completely garbage. It was like people were using like Fibonacci retracements and MACDs and moving averages and stuff. I mean, the absolute comedy, right? That stuff. But I'd say to get successful at trading, it really doesn't matter what you learn. It's a personality thing. So you might learn how to do what I do within a month, but it might take you 2 months, 2 years, 20 years to get over the part that makes people fail. And it's your emotional attachment to money, the way you behave in the market because of your cycles of fear and how the market makes you change what you do because you feel something. It takes years to whittle those feelings away to where you're more like a robot. Right? You're not sitting here like when you're losing, your heart rate's going up. You can't breathe. You can't focus. You're hyperventilating, right? That's kind of like trading is the art form of becoming a surgeon, becoming an astronaut. How do you do your job under extreme stress and then it doesn't bother you? And that's the journey most people have to be on. So you gotta be able, you're dead on the inside. That's all that matters. So that's a journey for most people. And that's really what you got to do. And practicing anything always takes 10 years to master, according to Malcolm Gladwell. So, you're going to basically, most people on average that I've dealt with that do become successful these days, a year or two, and they're good. 5 years like me with no coaching, they had to build my own system. Took a lot longer. I mean, you guys have it easy. To be, if trading's in your future, and within a year or two, you start to feel like you're consistent with the tools available to you and the education available to you now. Couple years, put in a couple years of work. We may get sudden news on the Ukraine-Russia situation. Yeah, that could create an effect in the market, but remember, that has zero to do with the pricing of our stocks. So if we do get volatility on things like war news, I'll tell you, I've been in this business for a while. War news never affects our stock market unless we're going to war, and it depends on where we're going to war. If it's in the Middle East, oil prices are going to go through the roof. If it's anywhere else, nobody's going to care. Russia, nobody's going to care about related to the stock market. So if the market dips really hard on some kind of Russia, Ukraine news, you have to buy. If the universe gives us a crazy red candle on something that has nothing to do with the market, war is bullish overall. I had an economics teacher in high school that used to say, war is good for the economy. That was her. Very first day in school, she's like, I'm going to tell you guys the one lesson you're going to take away from this economics class is that war is good for the economy. I'm going to say that to you all year long. And that was kind of like her thesis, that war always stimulates everyone's economies. And I still remember her little saying to this day. Yeah. As Mad Yoda said, all right, there was a dip possibly led by that news sparking something, and then it just creates an opportunity for people to buy. In the long haul, unless it's cutting off some kind of supplier or affecting commerce or something, it's the companies that are affected would sell off. Like if war was breaking out and there was, somebody was bombing and an Amazon warehouse was in the middle of it, right? Amazon might take a hit. But Boeing and JP Morgan, all these other companies wouldn't flinch. So the idea is like, how big is the war going to affect everything? And ultimately, war stimulates a lot of companies more than it, blocks other companies from making money. So usually, in general, most war-based news is going to become bullish in the long haul, or basically a non-effect in the long haul. As an oil trader, I'll tell you, I got so used to hearing war because, you know, let's just be real. We're not woke or political on the stream. The Middle East has been at war with each other since the dawn of time. There's always some oil producing country shooting at some oil producing country. Since I've been an oil trader, it's always in the buzz. There's a lot of hate in that area of the world. And so oil prices are like zip, 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 zip. And that's bad because, you know, just a couple million barrels of oil difference in production is worth a couple bucks of oil values. As an oil trader, I was an oil trader for many, many years. You're going to see a lot of, you know, that's directly affecting him because it's a single commodity. And, you know, you just basically possibly blockading 3% of the world production. Things like that, it can be very sensitive to war-based news, especially when the war is very central to like where the oil is stored, produced, shipped, you know, all that stuff. So as sad as it was, you know, war was always kind of like good for oil prices because any, you know, country that's getting bombed or this factory, this facility, you every single day you heard about it from some source somewhere. It was always bullish for oil, as sad as war is. But Russia probably don't have anything to do with our market. Any pivots looking at apart from DDs? So basically we have yellow line, 21,403 is always a resistance target. So this yellow line right here, I never exit my trade at yellow line, but because sometimes it is where the top is. I'm sorry, I never bet that we break through yellow line. Usually I exit my trade at that every time. And if it breaks through and supports, I can take that second leg of the trade. So 21,403 is a hard stop on my long today. I feel like today is a day that's going to pivot somewhere in here and somewhere in here. So I think we've got plenty of room to play off of. I'm not going to short off this yellow line, and I'm not going to bet that we sell off. The VIX is absolutely in decay. Now we expire in 2 days for the monthlies and equities. So there might be some kind of effect, but we're going to watch liquidity maps very strict, make sure everything's good. We are trading up just a little bit off of yesterday, so stocks will be gapping up. We need to make sure this resilience number after the first minute, this white number stays above 0 to ensure that the stocks have a healthy gap and go. So where we closed yesterday, hold on, actually right here. About here, 250, and we're about 340. So right at about 300 is about where that half gap is going to be. Let me go ahead and be really close to about maybe there. So half gap's always a long play. Don't forget to hit that like button, friends. To be a full-time trader, would you say you would need to have 2 years of salary set aside with no debt? I would say at least 2 years of salary set aside is perfect. You need at least 6 months of salary. But 2 years would be optimal. Most people realize if day trading is for them within 3 months. That's why I say the minimum is 6 months, because you may not be good at it yet in making money. But when I was trading, like I was basically working as an engineer, but then I got laid off, and then I was day trading, and then I ran out of money. Then I went and got a job, like a contract job. And then 3 months later, job is over, had a bunch of money again, traded, lost it, got a job, traded, lost it. So like for the 5 years I was trading and working, I would like work and then take off and work and take off. So you do it in cycles. So your first cycle, you should have at least 6 months saved up. And, you know, the ability to, you know, not burn your bridges so you can go back to work somewhere. And you'll usually know within 3 months if trading's for you. Probably, you know, you don't need to save up 2 years so you can jump into it. And after a month, say like, oh God, this isn't for me. I don't want to do it. Because you wasted all that time. Well, you had savings. I guess that's not wasted time. But usually 6 months is enough for you to say, okay, I do like trading. And even if you run out of money, go back to work, save up some more, repeat the process. But at minimum 6, optimal 2. Usually, but in a couple months, you'll realize that this isn't for you. Can you explain the half gap? It's the halfway point between current open and yesterday's close. And so on the SPY chart, when it pops up, you'll see a white box with a dashed line in the middle. And I've just estimated about where we were. I don't know exactly where it is, but I'm just kind of estimating about where we'll open. It's going to be somewhere right here, and then we close probably here. So I'm just estimating the middle. And the half gap is always a really strong pivot. because the close is liquid and the open is liquid. So in between two liquid spots is always double liquid. You're at the second job after going contract as an engineer, Gold Digger. Dude, you're like following my path. That's cool. Engineering contract job was nice. It almost paid like, some of them almost paid double my salary. Depends on what you got, how dangerous the job was or how rare it was to fill the space. I was a reaction engineer, so it was easy to get contract jobs because there's not that many of us. It's a highly specialized part of chemical engineering, and not everybody does it. And companies would hire me, whether they be like repacking their catalysts or whatever, taking their reactor apart, cleaning it out, packing it back in. They'd hire me for like 2 or 3 months to come in as a consultant and monitor and manage the catalyst repacks. So I'd go in there and they'd lower me into the reactor, almost called a yo-yo, almost like, you know, thing that's strapped onto this vest you have. They just like lower you down in this like thing that just, so I'm like dangling above this reactor. I can see like 50 feet down on the bottom. And I go down there and I inspect it. Then I'm like, yank on the chain. Hey, bring me up. And they bring me back up. And they put a layer of catalyst in there. They lower me back down and inspect the layer, go back up. Make sure they packed it the right way. Make sure the distribution was correct. That's what I did contract. It was so much fun. Those reaction engineers are very like not easy to come by, especially ones with plant experience. But yeah, that was fun. And a lot of times I would work like night turnarounds and stuff. So that way in the daytime, in the mornings, I can still trade. And then I could like basically like work, and then go home and then trade for a couple hours and fucking pass out and then wake up at 5 p.m. to go back to work. That was me for many years, right? That was kind of fun. You do cloud computing? Oh, nice. Well, that's a little bit better than going outside and, you know, like, because basically you can still have your phone when you're working. You're at a desk. I couldn't exactly trade while I was out in the facility, you know, climbing the racks and walking around up there. And I can't bust out my phone to look at my futures trades, unfortunately. What's planned for yesterday? I'm still looking to buy dips along the market. Now the question is, we either dip at half gap and go, or we find like slightly lower lows and go. Nasdaq has MHP at 131, which is pretty far away down here. S&P has MHP, which is nearby. I would be very honest with you guys. I feel like today the interaction with here is going to be very strong. We can test there. We can test there. Anything that loses here and comes back, I will confirm along at MHP just to buy every time. But my first entry pivot, I got basically a couple options. Either A, wherever half gap is, with resilience being positive, is always a long pivot. We're very close to expiration, so I don't think this is a big rally day and breakout. I think whatever we had, that was it. By the way, guys, my QQQ calls, my 510s that expire on this Friday, the ones I did have, as of yesterday's close, would be worth $1.3 million on my 50K trade that I put in. I invested 50K way back in the day, 1.3 million. And I know I told IDOC yesterday on the stream, in the middle of the stream, I told you about 800K. So right on this day right here, but I sold them for 50K profit. This is like what I could have made. So right here, I bought May 9th and May 16th, 505 and 510 calls. The May 9th ones would have expired absolutely worthless. But the other hand, the rest of my position that I had was 510 for this Friday. And I sold right about like here somewhere when the theta burn was greater than the delta gain. I was like, we're never going to get there. They're not going to fix the trade war this weekend. Are you kidding me? Might as well take the 50K profit I have made. 100% gain on the trades. That's fine. And all of a sudden, Friday rolls around like we're meeting this. Thursday rolls around. Trump says you better buy stocks. Friday rolls around. We're meeting in Geneva. Sunday, we got a trade deal. And it's just like, wait, what? So my $1 million trade would have taken off. At least I was smart enough to get it. But man, my heart is broken today. Yes. Somebody's knocking on my door.
Hello.
Hey, what's up? 4 minutes till market opens.
Okay.
What's up?
Back.
Welcome back. You
Thank
get up at like
you.
3 or 4 this morning?
Yeah, I barely slept. I'm like literally on nothing. But before, okay. But do you want anything from Starbucks besides the usual sandwiches, like macchiato? She wanted a caramel macchiato.
Oh,
Get her that.
What is like something I have that's non-caffeinated?
Lemonade, Crusher, Spritz.
No, can you give me like just like a decaf coffee is fine.
Okay, iced.
Yeah. Yeah.
Any milk?
Sure, just surprise me. I don't care.
Oh shit! I hate when he says that.
Surprise me.
No.
Just anything with decaf. Just say whatever decaf.
Okay, whatever.
Yeah.
As is.
Yeah. All right.
Yes,
Oh, the people on the stream want some coffee too.
y'all are too expensive.
Oh yeah, y'all way too expensive. But yeah, anyways, so be looking for long setups today. Dips to buy.
Or hot.
Either one's ice is fine. But yeah, so you were saying earlier, you know, there's people that show their cars, and you know, all power to them. You're not gonna learn anything from them. A lot of people out there that actually stop and teach. I love teaching. That's my favorite thing to do. I used to teach at the University of Houston. I taught engineering classes. I love it. I think I'm just built to do it. And I'm always like, I'm like everyone's grandpa, dude. I'm like, gather around. Let me tell you a story. Did you know this is how this works? You know, this is how this works. I'm always talking like that. And the other day I was explaining how the Fed works to IDOC in the car. I'm sure she just rolls her eyes when I start going into teacher mode. But trust me, don't get high with me, because I'll sit there and I'll become Professor Matt. I'm like, guys, you know, like maybe we're like inside of a black hole, you know, like because, you know, like energy can't be created and destroyed. You know what I'm saying? Like that's me. Trust me. When you get high with me, it's exactly like that. I'm probably the most fun if you're like a nerdy person. You have a great time. But that's basically how it is. I love talking, teaching, and so I do this. I love it. It's fun. And the boot camp, if you guys had fun at the boot camp, it's by far the most substantial thing we do, and I don't make any money off of it, so you know, basically it's not a huge revenue stream, and I do it just for the love of it. I do it because I want us to be known. My selfish reason is I want to be famous for being the person that taught retail traders how to trade. I want the legacy. Be good. Don't say that. You live in Houston, King. You can bring over some 50 milligram gummies and we'll just get baked. I partake less and less in things these days because I'm on this like health kick, but I've been, you know, but you know, THC is 100% healthy for you. It's probably healthiest thing for you as far as medicines go, because it's healthy for your mind. It doesn't do anything to your body, you know? It's like, but still, I'm kind of like cutting back on most things. The decaf coffee over here. That's Matt being good. All right, looking for half gap longs to buy it if I can find them. Quarter of a 10 mil. Yeah, that's enough to get somebody a little hit. 50 will get you rather stoned. I'm so sensitive to it, dude. Five milligrams will get me pretty good. I'll tell you guys a story later. So half gap's always a buy. If res is greater than 0, which it is, open is always a buy on that BLU setup on the open. So we're going to get our liquidity maps in just a little bit. No shorts, no anything right now. Half gap is a buy. Close is a buy from yesterday. Anything inside of here is a buy. So on futures, I'm looking at NASDAQ and S&P together here. Just kind of stacking them together. Don't underestimate how bullish this market can be. The same as yesterday. What the hell is going on here? Are we not getting updates? That can't be true. Maybe it's just the way the options are spread out. Can somebody double check just for my own sanity if you had yesterday's levels, unless that isn't updated yet? Hold on. Are these different than yesterday's levels, just for a sanity check? I mean, it's true that we could be this far above hedge pressures and stuff, but does anybody remember yesterday's? Do me a favor. This is for the importance of me and you and everyone else today. Were they this low? Yes. Was this the exact levels yesterday, or was it different? Somebody posted a picture yesterday. Okay. 506, 506 in QQQ. Yeah, so they are different. This is just what it is. Okay. Thank you. So 515. Okay. Yeah, they're different. Okay. Yeah, no, that's just what I was thinking, is that they were really far away, but that's pretty normal. Okay, so today's setup's pretty simple. There are longs off of hedge pressure. There are longs off of the open. There's longs off a half gap. So there is a gap and go 1A trade from here up until yellow line. That is a pretty good setup. So one could advantageously be long from here at the open, from here up to the top. That's good. But also the dips to buy are nice and clean and easy. It'd be nice if the market did pull back just a little tiny bit. And of course, the S&P is way down here, 580, 578. Yesterday was 568 and 570. Okay. So we're still good. We just blasted up on that news. Options just hasn't been able to catch up. Setups in here just like this. Okay, let me draw. So I'm going to wait for a teeny little pullback and we get it on the long. I could throw a contract right here at the open. And half gap is roughly 3, 0.8, 0.5 out of 10, 5 points lower than open. So right about 0.8 is that half gap. Right here is the open. Okay. Resilience greater than 0. Open is support. Half gap is support. I don't think there's any news today. It's a pretty clean day today. So it's all bullish setup again. Question is, do I want to chase along at the open? Or wait until we get this bounce here. So this is a good setup longing at the open, by the way. Let me take it in one of my accounts. The breakout. And close. I'm just shoveling through my my funded next, trying to get them all funded. So okay. Yeah, long at the open, that's good. That's good. In my Tradeify accounts though, I want to be very careful and make sure I get a good dip to buy. So on these, again, just like yesterday, the open trade is good. I just took my trade to there on the open. Do I want T or lemonade? Lemonade's cool. Nice bull setup again today. No fading. But what I can do, just like yesterday, I know it's going to be kind of boring if you guys are watching me wait, but this is a good bull long setup out the door. QQQ is good. Monthly maps. DD ratio, SPY above MHP, everything's great. Let's observe the monthly maps again. Nice and bullish again. Things are clean. The S&P, interestingly enough, QQQ is still bullish. There is a liquidity pocket nearby, which is good. Perfect. No shorting this, no shorting this, no shorting this at all. Even if it pulls back, remember, there's always an opportunity. There's always a bounce. There's always something. Even if you miss out on the big up again a second day, there's always an opportunity. Never underestimate. Now, yesterday there wasn't an opportunity, but there's always one. I just traded one, my fund and next. My fund and next accounts, I was working all night last night to try to get them at least through one day. So I was trading that overnight. To try to pass them. So I'll be transparent with you guys on that. So these are my funded next accounts. This one is my funded one. I don't touch that overnight. I'm gonna wait to get a better setup. And so that's a $2,500 profit target with 40% consistency. So I need to roughly get no more than $1,000 per trade so I can get it in 3 days. So each one of these advanced, and this one hit daily loss limit. So 4 of my accounts individually traded just in last night's up and down, hit the target. 1 of them didn't. So that's good. Like basically 4 out of 5 of them are on journey to passing. So I'm trying to get 6 funded accounts with those guys. Overnight, oh dude, I was just scalping just out the door. Like basically, let me get a S&P here. I was buying the dip when the market opened. I just longed. I was going to long here and then long again. I threw some contracts. We popped out, closed it. The market dipped, threw some contracts, popped up. I closed it all through here. Super easy. You know, we were running up and down maybe like 10 points and just with one NAS. And I was trading NASDAQ by proxy because I needed to move faster per contract. But that was it. So essentially of those 6 accounts, the funded account, haven't touched it yet. The 5 additional challenges I bought yesterday, one of them hit daily loss limit. 4 of them are on track to getting funded. So daily loss limit gives me one more chance for tomorrow. So that's pretty nice. Yeah, you always make more money waiting over forcing. So while there are long pivots from here, I'm going to tell you guys, one of the best things I want to do is find an opportunity. There's always an opportunity to trade. Resilience is getting slightly better, so the probability that this continues to go is higher. It may be another day I miss out on some long, but I always wait for better setups. Last thing I ever want to do is be caught in a trade that sells off. The probability this sells off, though, very, very, very small. Very, very small. So if it does, what I'd like to do is, if it does and everybody's panicking and freaking out, I can still jump in on a good long trade. Bull market getting better, bear market getting worse, which I like to see. The way that you read your monthly maps here is that you're going to look for... So the greater market, all signs are bullish. In chat, you guys, how many do I need to be bullish for me to be bullish? From the boot camp, do you guys remember? Well, you haven't learned that in the new boot camp, but old boot camp folks... How many of those indicators need to be bullish? I just need one. Just one. I find every excuse I can to be a bull. Because the blind monkey always makes money longing the market. So 3 of them are bullish. And that's awesome. I'm not trying to short the market off. The market sells off. I'm waiting on the sideline for a dip. So monthly maps, how you read this, right? Monthly maps will project the future. It looks 3 months into the future. And it's telling you the market's bullish for 3 months. The options where you're trading in this dark gray area, you're in a bull zone. So it's bullish. Step number 2, so there's 4 steps. Step number 2 is the bull zone bottom is sloping down. Check. Bulls will be longing more. Longs accumulating. If the bear zone top is sloping down, the bears are exiting position. Short squeeze. You're going to get longs accumulating and short squeezing. This is a bullish trajectory. And then, of course, if there's no space between them, then the market's very liquid. And leading into expiration, the market couldn't be any more liquid. This is a liquid market. If people think that we're going to be selling off, they are absolutely... in the wrong. The market's going to it's going to need something to trigger it to sell off. Any red is a buy for me. So I'm good on that. So let's not be silly and chase at the open. Remember, guys, there's always an opportunity. I'm not thinking about yesterday. Oh, God, I missed out. I got to chase this long. No, we're not idiots here. I'd rather sit there silent on stream and not being the one that made $100,000 trade or whatever, missing up, than to come here today and blow it all up being stupid. I'm going to find a pivot to trade off of, and that's what we're going to look for today. Let's double check QQQ. Yeah, NASDAQ moved up a little faster. S&P is starting stabilizing here. All your resiliences are positive, so the market is supporting inside of here. This is a good long entry to trade off of. Half gap and gap fill are going to be 2 of the stronger trades today to take longs off of. Let's do SPY. So we wait. You guys are here to learn something. We're going to wait. Or I'm going to wait. I don't know what you guys are going to do. I'm going to wait. 87.8. So roughly 10 points lower. So about 02 is it? This is right about there. Okay. A positive resilience number, this white line, means that the half gap is support. In reality, this is always a support, and so is this. They're about 5 points from each other. So it's worth taking a stab on the break on the gap and go setup off of this line itself. As we had an opening range breakout failure, I'm more inclined to wait to see it test before I do anything else. Yeah, I'm watching S&P, but my DOM is on NASDAQ. It depends on, when I trade, I'll change the DOM. I'm watching NASDAQ just because I'm always watching everything. That doesn't mean anything. These days, you can trade them both equivalently. They're both going to pivot at the same spot. So if you get a SPY pivot, you can trade it in NASDAQ. Now that the top 10 stocks are basically tech stocks, it's all going to move the same. But yeah, thanks for letting me know. Remember, guys, We aren't dumb. We'll wait. This is a good possible long entry, though, to try to take something. I am going to wait till a little tap there. I'm only 3 points away. We'll put one contract on it. Just one. One S&P. And then I'm going to save my funded next funded account for my better pivots. So one contract just to have something on the table. I'm gonna long here. I'm gonna long here, and I'm gonna long here. 3 different places. I'm gonna split my accounts up there, there, and there. Remember, we have expiration coming up pretty soon. So I'm a little early on this, but that's okay. See if I get something good on this. Just plotting one. One, and I'm going to add, when we get to here, I'm going to add one more. So what I'm doing is I'm taking the possibility that this is a pivot, and then the possibility that the gap fills a pivot. If we fill the gap, that would be unusual with positive resilience. If this white line is greater than 0, then this is the low of the day. It would be very rare to break this low of day if res is greater than 0. So just in case the market continues to rally up from here, I'm going to take a long from here. But in case the market dips, I've got plenty of room to jump back in. This is a textbook bull long up setup. 1A is the gap and go. 1B is the test at hedge pressure to pull back up. And that's way out of bounds. So I don't think we'll get that today. And NASDAQ hedge pressure is way down here. That is also a strong pivot. So worst case scenario today, there's a bounce right there. We'll see if we get it. So even if I take a little bit of heat here, here, and here is a potential long setup. So as I touch my pivots, I'm going to start adding to each account. I'm going to add one account there, one account here, one account here. I'm going to get all my accounts loaded up inside of here to rally it out. Watching all the indicators, staying positive is good for the trade. Like I said, I just put one contract, nothing big. Keeping my risks small. Let me get ready to... I'll take my funded next funded account, which is the tightest of the accounts, and I'll trade it at like the best pivot, which is here. SPY doesn't have pivots anywhere nearby. Unfortunately, SPY just has gap fill, and that's it. There is no hedge pressure nearby here. And then I wait. So I didn't chase the long there. I'm waiting for the dip to take a long here and here. Here's half gap. There it is. Indicators are all looking pretty okay. Bum, 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 bum. Is it so hot in here? And if we break 5902, that's really bad. It'd be the unusual trade. This would be bad. If we break. Expected here. Bum, 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 bum. Just put my one here. waiting for that. If we start to lose this resilience number, this white number right here, then we're going to call it. So if this goes below 0, I'm going to be a little nervous. But if it's at 0, I'm usually okay. So. This would be unusual to break this. So if we break this with velocity or this white line goes less than 0, I'll just close it out. Right at the gap fill is the next little pivot we're going to be looking at. 58.77. Yeah. I would say that it'd be rare for us to break this and keep going. But in either case, there's that gap fill. Okay. Resiliences are still positive. That's good. Add one more contract to that. No, that would be rare to break and keep going. As long as resiliences are positive, I usually feel pretty okay about that. But that is unusual. This is the bounce there. Give me that wick, baby. A little overshoot on that. That's pretty rough. All right, that's good. Hopefully we support here. Looking for that. But if we lose this or resiliences are negative, I'll probably cut out with a loss. Gap fill is where I was longing off of. So this is a little heavy, but hopefully we'll still be okay. You should be all right. Should be good here. There's the bounce. If resilience does not get above 0 with velocity, I'm going to be very scared that we lose half gap and keep selling. So we should be okay, but stocks are selling pretty hard. That white line is telling me that. There should be a bounce here, but if it doesn't, pick up some velocity pretty soon. Keep your eye out on this line right here. Let me open up the resilience to make it a little more right on par here. So we'll check NASDAQ, just where we are at half gap on NASDAQ. Okay. Kind of in the same boat here. This should be okay. Hang in there, NQ. Hang on in there. If we don't get a bounce within maybe 2 or 3 minutes, I'm gonna abandon the position. S&P resilience is losing, so I might actually decide to get out of this one. Unless we touch half cap. Once we get back to here, I'm gonna decide right at the middle what I do with the position. We'll see if I get anything out of it. Bounce, baby, bounce, baby, bounce, baby, bounce, baby. Hitting half gap with resilience negative. Ooh, that's not the best. Let's see. Do we fill the gap? God, I love doing this. It's close to 0. Usually when it's close to 0, I usually hang on. It's slightly below, so that's actually kind of a scare signal. I'm going to close my trade on the gap fill. Unless resilience gets better. Ooh, ooh. Ow, ow. I don't like it though. Resilience is finally tailing up, but I'm not a big fan of this. Not the biggest fan of this one. Normally you'd want to see this stronger, so I'm going to hold on just because I want to hold on, but my confidence in this is a little bit lower. That's why I'm just kind of holding on with 2. And this probably is going to end up being a loss if it doesn't get better. White line needs to be better than 0. If we touch the close price again with less than optimal resilience, I'd be more likely to close out. All right, while we're chilling, guys, take a look at what our partners are offering you guys today. We have some deals going on. We're doing 2 giveaways today. My Fund of Futures and Tradeify, both today. We're not picking up steam in the stocks. It's still fighting at 0, but hopefully we should be okay. I don't like the way this looks, though. I might actually be thinking about closing this out in just a little bit if I don't get any run. That bounce to half gap was good. I still like to bet on the bull market, though. While we're waiting, let's take a look at video. Like I said, I usually take long trade until the market zaps me. Even if I lose this, there really is no strong pivot until lower DD band. So if I take a loss here, then I'm out, then I wait, and then my lower DD band I can get a trade on. But there's really not much in the middle between A and B. So if this does flush out and sell off today, we'll just kind of chill and watch. So far, though, whenever resilience is close to 0, I still bet on it being better than 0. NVIDIA is opening below monthly hedge pressure, which probably isn't the best. Maybe 5,900 holds in the S&P, we'll see. See if we hold there. Not the best looking day to open, but at least we didn't chase along at the high, right? This is the only pivot we do have for a while. If we start losing this, there's nothing else. Nothing else nearby. Monthly hedge is down here, so I will always long at the gap fill with positive res, but now it's negative, so I'm not liking this that much. Not a big fan of this one. But like I said, when resilience is on the fence, I never bet bearish. I still buy the dip. Even when it's close to 0, I still buy the dip. I bet that the stocks don't sell off. And if they do, they do, but I usually bet that they don't. So we should hopefully be okay. Let's not find lower lows. Hopefully we can be okay. I'm still betting that we are okay. Let me draw this up here a little bit more, closer to here. If I get bad luck, I just get bad luck. Always bet in the direction of the greater market. This is bad. If we break, the market will sell off. I don't think the market's going to crash today. This is bad. This is okay. We want res great. I always bet in the direction of the stock. So hopefully res stays good. There's people still wanting to buy the dip. This is the first dip the universe is giving them. Come on, baby. Nvidia falling to half gap. There's usually a bounce point at half gap. So we'll see what Nvidia does if it maintains its little spot here. If Nvidia lowers below half gap, it's going to take a hit on resilience. So resilience is an aggregate of all the stocks are doing. Guys, don't forget to hit that like button. Thank you for joining the stream. I love you guys. 730 people here. Thank you for joining in. Daily bias is still bullish. Still buying the dip, still bullish. This is not looking so hot though. But indicators are starting to get better. So I'm okay. Let's hit that like button 300 times. We'll do a giveaway in about an hour and a half. No, in about an hour. We'll be doing a My Funded Futures and Tradeify giveaway today. Everyday giveaway, everyday giveaway. What was that alarm for? That's a really good question. Why did I set an alarm? At 8:55 every day. That doesn't make any sense. I think I might have set that alarm over the weekend for something like last week. To wake up early for something on the weekend. I forgot to turn it off. For my birth control. Yeah, I forgot to take it. I'm gonna get pregnant tomorrow. Doc, you better not knock me up. I'm not ready yet. I don't bet on markets crashing ever with greater market being bullish. With greater market, all three signals being bullish, I always bet that the market heals itself when we're good. So at least trading to fill the gap is appropriate. Res greater than 0, fill the gap. That's my scalp. Fill the gap. Let's run it. Run it, run it. Yeah, run it, run it. Yeah, run it, run it. So I longed some more, long some more. I got my account split up. This is my first entry. Like I said, guys, never bet against, even when it's on the fence, I hold the fort. Bring it home, baby. Fill the gap. Let's go. I love making money. I know I make it look so easy, but it's not. Trading's not easy. Trading's hard. Now this better turn green. Come on. Half gap hold. Yep, half gap. This is a long entry point here. Resilience is greater than 0. There's the bounce to the gap. This is redistribution zone, so we should be good. If this breaks this and dies, I will be absolutely confused. Like, absolutely confused. Stocks are looking good. Universe is literally handing us a second free entry on this. Reses look absolutely positive. This is going to hold. Universe feels sorry for the people that missed out and is like, let's give them another long setup. Keep an eye on Nvidia though. Hang in there. Hang in there, market. Bum, bum, bum. Resilience got slightly better, so we've closed the gap here with less resilience. We are here with better resilience. It's a stronger pivot than it was there. And I'm stronger than yesterday. Universe felt so bad because you missed out, and it gave you a bone so you could take it. Volatility a bit concerning today, slightly. You're right. It is monthly expiration. That's Britney Spears' better song, by the way. We are trading in a bullish liquidity map right here on UVXY. So be very careful the volatility doesn't pick up on you. Everything will turn to shit though if this white line goes less than 0. Keep your eye on it. Don't lose sight of that. Nvidia. NQ really doesn't have any targets. That's the problem. NQ has nothing really to go by. The one problem is that NQ actually does have a really good pivot. Roughly 1.7 times 4, 68 points lower. It's right about 50. Nasdaq has its hedge pressure pivot there. Then it has its gap fill here. Universe is like, I feel sorry for you guys. Here's a second chance at the entry. Thanks, Universe. You are the best. Nasdaq did hit yellow line today. You guys remember when I talked about that yellow line target? How cool is this, right? We talked about this in the boot camp. These yellow lines, when I told you, are rock solid pivots, and we showed you guys yesterday. 21,403. I calculated that months ago. It was a really solid technique that's exploiting. S&P, come on, hang in there, baby. Resilience is getting better. I trust resilience. I don't trust anything else. And trap some bears on here at the bottom. Positive res, Nvidia tailing up. Oh, this is good. It's gonna rally. Be good. Hang in there, baby. And I'm stronger than yesterday. One more test. If it closes the gap one more time and the resilience is getting slightly better, we had a couple stocks tail up on monthly hedge break. We have a tail up in monthly resilience. So let's look at this. Let's look at the add the strategy here. MHP break up to the upside. Let's see who it is. Google. Okay. Save a statty, Google. Oh, that was earlier today. Let's see who is above MHP now. Gamma squeeze time, baby. This is a gamma squeeze indicator that we're looking at right here. Distance to monthly hedge pressure. Who just broke through? That's big. I guess it was Google. Okay. Give us some love, Google. At least today, we're not going to break this for highs. So I would say that at least today, that yellow line on NASDAQ is pretty rock solid as being like the high of the day. And I'm going to draw a line here just to remind you guys about where it is, similarly speaking. It's not a yellow line for S&P, but I'm going to label it. NQ, yellow line, proxy. Proxy always means it's a pivot somewhere else. Okay? So basically, it is a pivot and NASDAQ at the high. It would be very hard for me to believe that we break through and go. Let's turn this trade green, baby. Let's go, let's go, let's go. Come on. Hang in there. Resilience is getting even slightly better. A couple stocks and gamma squeeze to the upside. Cool. We rally again today. Hopefully so. Give me some love, market. Let's double check NASDAQ while we're here. Should be good. Yeah, everything's good. Now we wait. Do I consider VWAPs? No, we have something better in VWAPs. So you can predict volume before it happens. VWAP just shows you where that weighted average price is. VWAPs are decent, but the VWAP is more of a self-fulfilling thing than a predicting thing. Of course, things are going to bounce and the moving average will catch up to something that's consolidating and there will always be volume there. VWAP coincidentally lines up with the high volume node just because of the way moving averages work. If something sits still for a while, the moving average will catch up with it. So as far as predictive power goes, the VWAP coincidentally pivots. Instead, we'll give you a level to look for. Now, again, let's keep our eyes open here because this is selling. Make sure there's no news coming out. The data still looks okay. Still looks decent. Is Trump talking today? In Doha. Universe gave us a second entry for those of you that were sleeping. The universe felt bad for you a second time. Here's another dip to buy. Oh, something just sold. Maybe it wasn't Google. See, I told you guys, you need to learn to listen to me. Universe felt sorry for you, waiting and not doing anything. Ooh, gonna cash out with some money. Ooh, I love being so good at this. I love being so good at this. Trump is talking right now. Come on, keep going. Resilience never lies. Resilience never lies. Come on. This is my worst position. Turn green, man. Jeez Louise. Can we turn green yet? Come on. Now Trump's talking into our original whole plan today. Hang in there. Stock is looking good. Everything's good. White line above 0. White line is support. As I draw on the screen here, resilience is greater than 0 is support. The universe felt bad for everybody. Not once, not twice, but gave you a third time to chase the dip. And if you're still battling your fears of the market, that's okay. Don't worry about it. It takes a long time to get over feeling afraid of the market. I wish I had a money printer thing that could play the money printer song. Is he talking? I know, right? Like, there's nothing he can say that's going to turn the market bearish at this point. There's nothing he's going to say. I mean, Trump's a loose cannon, and he'll say stuff that he probably shouldn't be saying. He is a loose cannon, but still. God, this was such an easy day. Oh, no overshoot on the pivot. Oh, beautiful. Yellow line is a top, though. I wouldn't be betting that we break through it. But I'm okay with, like, you know, free money. Let's take that profit. Let's take that profit. Let's take that profit. Ooh, all right, let's take that. Just scalping. I got my 40 points. I'm good. I know I took a little bit more drawdown on this one, but I did scrape this one positive. Let's take that profit there. That's good. Okay. Oh, shit. I forgot to trade my fund index. Whoops. Whoopsie. And that's good. Okay. Where can I put this on the screen? Again, once I get my 40 in Q points, I'm pretty good. I usually go for 40 to 60. I got 60 on that one, which is great. There's the P&L on these. I'm done. Fully closed out everything. I try to get like 1 to 1, 1.5 to 1 gray or so trades. Obviously, and anytime I take a long and we dip and it gets a little unusual and I average my cost basis in, as soon as I get my regular run, my drawdown was a little more than my reward on this last trade here, which I think was this one. All the other ones were here. So as you guys know on the stream, I demonstrated, I longed with the S&P. As the market fell to each pivot, I just longed one account, and then put up, closed them all out. And that's how I trade. I mean, I use the prop firm multiple account things to trade against each other. I never copy trade. That is so for newbies. Oh my God. China's Commerce Minister trying to pause his unreliable entity list measure on 17 US entities. Only 17, huh? I wonder what they are. Rocket Matt, best trader in the world. That sounds like a cool lyric. Guys, you might smash the like button really quick. Sub me to the channel if it's your first day here. I actually have a true edge in the market. Now, again, I don't know what's going to happen from here. We are dipping one more time. The market is stabilizing again. Trump is talking, so I feel like I do want to be on the sidelines until things pan out, but I don't think that the market's going to crash or sell off today. But our yellow line pivot, as much as cool as this one is such a rock solid hard pivot to break. It'll be a fight to break that a second time. So let me chill and let me let old Trumper say something. I think my Starbucks is here. Hold up. You guys hit that like button real quick. We need 300 likes.
Right. It's you. I'm monitoring.
Is that what I really sound like?
Yeah. It really...
Watch this. Watch this. Look at the phone really quick. No.
Wait,
I want you to look at the phone.
I think I like...
Hey, iDoc. I have something to tell you. Are you looking at your phone? You are the best thing that's ever happened to this stream. You're amazing. You're not watching. You're amazing. Thank you for bringing me Starbucks. I miss you, girl. I miss you.
Biggest fan.
I miss you, girl. Thank you so much. Is this a refresher?
Yeah.
Can I tell you a secret?
What?
They got caffeine in them, by the way, but I'm okay.
Really?
I didn't know that they do.
What?
It's made with tea.
Oh, I didn't know that.
Yeah. That's okay. I'm okay with it.
The app says no substitution allowed for the establishment. They said like you can't make anything decaf.
You can't?
Yeah, not on the app. The app will not allow it. Just because they don't want to go through them.
All right, everybody. Short Starbucks now. Jesus Christ. Oh my God. Lame. No, I'm just kidding. Excellent. Hey, thank you so much. That was really nice of you.
You're welcome. Great.
She loves bending over and picking up the dog and showing her cleavage on the stream so much on accident. You know, it's
There's
planned.
nothing to show. I'm Asian. I wish that I can get you canceled because of my cleavage.
Canceled? This is Wall Street. You double my views. I'm gonna get canceled. You kidding me? These people love it.
Like, goddamn. Making
No,
a
it's so
boy
funny.
feel bad here.
Wall Street, you could be doing.
Look, I look like I'm wearing diapers. I barely have a booty.
That's so funny. I could be doing cocaine off your butt crack and my fucking views would
look at
double.
that.
Hilarious. Okay. Love you guys. Hey. Is his hair growing back yet?
Yeah, he's like a little bit.
A little bit. Are we just thinking he's growing back? What do you guys think? Does Pickle look okay that he shaved? He kind of looks like a little, what's it called? Like a golden retriever puppy now, kind of. Y'all like him shaved? Triple? Yeah, definitely would triple the views. Somebody said it wouldn't double, it would triple the views. So again, market's still good. Data's still good. The universe felt bad for you and gave you guys like a 4th entry at half cap. It's kind of nice, right? Algo just penalized you. Yeah, pretty much. People are like, double. Yeah, we'll get more of that. What did I just see? What are you doing?
I'm practicing.
For what? The circus?
My money don't jiggle jiggle. It's flat.
Oh, you see what I have to live with, guys? You see what I have to deal with every day. All right, thanks. Thank you so much for the Starbucks. Are you gonna go to sleep?
Yeah, well.
Oh, okay. I was thinking you can sleep in here. It's probably quiet. Okay.
Oh, do you have the cash? Ready.
I did yesterday.
Okay.
Did you see your Zelle this morning?
No.
Check. Just go and check. Just go. Here, take pickle. I'll tell y'all. Oh God, no! Oh God! Oh no! 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 Embarrassing. I'm at work.
That's for you guys too.
Should come to my office, be like,
Oh, you're so cute. You can
Oh
mommy
my
love
God.
you.
oh my God,
Okay, let's go pick up.
y'all are too much. See what I have to deal with. Okay, that was a decent trading day. I think whatever this is, was this 35, 43, 4,500. Not a big deal. Pretty decent, you know, smaller trades, but let me tell you guys the technique I'm working on. Let me double check where this was. You guys see how it works, right? Don't bet against the bull market. Let the bull market prove you wrong. Anytime resilience is falling to 0 in a bull market, I never bet that it loses. The rule of thumb with resilience is always bet that the stocks do better in a bull market. Anytime it's close to 0, I still round up and say it's above 0. Can't take our girls nowhere, dude. Ryan, you know it, man. I might be getting pregnant tonight. It's a pregnant man emojis. Oh my God, y'all are so funny. All right, guys, let's get ready. We got a giveaway going on in roughly 45 minutes, like we do every single day at the same time. Yeah, but that was good. About 4,500 bucks, I think. Just kind of adding that up in my head. Not a bad way to go. A little volatility chopping up, but you guys got to see a little bit of pro execution. This is a technique that I use cost basis management. I actually did this in 2 of the accounts. So essentially, as the market fell to, let me go to S&P. Right? I just know about where the market can pivot and where the point of no return is. It's bad if we fill the gap and keep going. But at least for now, indicators were all really strong and bullish, all above 0. So the S&P, I longed here on this account. And when it fell, I longed here again at the gap. So I have a potential 1A setup. And I also have a gap fill trade on positive resilience, right? So we always know that I have a trade from here to next resistance and here to fill the gap. They're both set up. So I take both of them. I longed again, close that out with a little bit of profit, because anytime you long and take a second long, you always trade the next pivot. So that way I didn't hold this for it to keep going. I just traded the next pivot, and that's all I got. I longed at the S&P, and as the market fell, I longed some of them on NASDAQ, and then it fell along some of them on NASDAQ because NASDAQ was also hitting pivots. It's all in the same, it's all going to pivot at the same point. But basically, I longed on the same thing on QQQ, the 1A close price long pivot, which is you always take it when your resilience is above 0. So as we fell, I longed here. And then as we fell here, I longed here in a couple more accounts, and then I dove back in. The bigger trade was when I dove back on NASDAQ. I actually bought one, and then I bought 2 more on NASDAQ here in that same account. The rest of them, I just longed straight up from there. So that's basically how I cascaded my trade. So long again in 2 accounts. One was S&P, one was NASDAQ. The NASDAQ one I longed with 2 contracts. The S&P I longed with 1 more. The rest of them I just straight long from the bottom. And that's it. So if I know about where it's going to pivot, I'm just going to spread my risk around it. And that's why my trading accounts never are like the same. Copy trading is silly. Spread your risk around. The later entry, which is the point of no return, where I say the word bad, is always the point of no return. If we break this, then I cut out of all of them with a loss, but I'm betting that we hold this at least. Now, again, this is a really hard pivot to break. And of course, the open is a support pivot from here as well. So half gap is good. Make sure I kind of draw this in the right spot here. This actually needs to be closer to, this is actually about like here. Yeah, but this is Resilience 101. This is one of our best indicators. We're using an aggregate of what the stocks are doing to predict what the S&P and the NASDAQ are going to do. Very simple. Resilience is a fan favorite indicator here. You guys see my screen now. Thank you. Thank you. Yo, that dragon fruit, whatever, man. This is good. Y'all had this one before? No, not dragon fruit. Blackberry. Something. Not so bad. And then I'm still waiting, right? So again, each one of these pivots gets stronger or weaker based on this white line. This white line is a strength pivot based on indicators. Strength is above 0. As it gets more and more above 0, the pivots get even stronger as you touch them. So let me zoom in on this so you guys can see a little bit better. Let me clear off the screen. That was a pretty simple scalp. Now I'm going to wait and see what the conditions do. Every time you hit the half gap, you compare resiliences each time. So an example is, let me draw on the screen. Right here, it was 2.5. I'm going to write it on the screen. We tapped it again. It was, basically 1. It was worse. We'll say 1. We started dropping, and then it jumps to like 10. Market goes this way. It bounces a second time. Let's see if it's closer to like, it's actually 12. Then we hit it a second time and it's 17, right? So essentially what it's telling you is that this is an indicator that's looking at the percent of market cap that's fluxing through a box, either this way or this way. And this is the open price today and the close price yesterday. It's a very big liquid spot inside of that redistribution zone. And because of that, we look at what all the stocks are doing. If the number is greater than 0 and improving, it just means, or if the number is greater than 0, it means more stocks are on this side of the half gap than on this side. Ideally gapping and going in this particular case because everything mostly gapped up. Let's pull up a stock just as an example. NVIDIA, right? Let's watch what NVIDIA does. NVIDIA is a big part of the S&P, and this is market cap weighted. NVIDIA being right here is half of the reason resilience is greater than 0. If NVIDIA just crosses this line, you will see resilience take a nosedive. It's very sensitive at the middle. And right now, what it's telling you is a seesaw, like a market cap seesaw, that's telling you the majority of the market cap and the stocks themselves are on the bull side. There's B and there's BR. So on the seesaw, you're going to have more bullish stocks than bearish stocks, at least through this zone. Since we're looking okay, it's a 12, so the scale is minus 100 to 100. So it's tipping. 0 is if every stock was exactly at the middle of its range, then the indicator would be at 0. So watch NVIDIA today. If NVIDIA falls below there, that's a huge market cap hit. Resilience would dive out. The fact is that most stocks usually will try to support their half gap. And so if NVIDIA gapped up and then fails that range, it can fall here to fill its gap, and that can be devastating in today's market. We don't like to bet that the market's going to crash and sell off. We like to bet that the market would hold, right? So looking good. It should take one more long here. Just paying the NVIDIA bounces. We'll see. Ooh, get touched. It's not what you think. Oh, it's exactly what you think. Actually, it sounds spiritual. Is it a spiritual name? We're spiritual folks in the household. Like touch your soul kind of thing. It's a trading indicator, trading view indicator or platform. This is so we basically white labeled Trading View and built our own version of Trading View. Trading View on crack. It's 1,000 times better than old Trading View because I had to build my own tools into it. You read that as get to shade. To shade. I love it. All right. So how much does Rock Scooter cost? So the platform itself is $99 for the first month and then $199 each month after. But we're running a special now, a grandfather deal. So you guys make sure y'all jump in on it. Half price to check it out month 1. And then month 2 is $199 every month going forward. But we're having this new grandfather deal where it's $159 locked in for life. As long as you sign up now during this deal, that's the final monthly cost. It's $40 off forever. So we're doing this like promo deal. Yes, sometimes so $100. And that also includes the boot camp. When's the next boot camp? It started on Monday. So we load up at 4 o'clock every day. Which video talks about red and yellow lines? You want to rewatch that? It's called illiquidity pivots. You see how clean this yellow line pivot was? How clean that was? So good. Crazy to not be part of this community in this tech. It pays for itself in one day. People are starting to notice. People are starting to tell their friends. It took a couple years for us to like, you know, grow through the prop firm wasteland of all the Lambo driving losers out there. But people are starting to realize stats talk. That's all they care about. Money talks. So now everyone's kind of like, wait, these guys actually are doing something different. Let's check them out. I love my friends that are all Lambo driving losers. Nothing against them. Nice and clean. Okay. So resilience is an aggregate. And watch, and I'll tell you, see how NVIDIA bounced on the half gap and the market just kind of turned right up. What you really want to make sure of is all of these indicators down here, the 3 resiliences are tiebreakers at each particular spot. Let me explain how they work to you guys. They're going to be buckets, right? Resilience is by far the best indicator that's ever been invented for indicators, and I'll tell you why. Most indicators are price action-based indicators. This one's not. Let me tell you what it is. Here's 2 buckets, okay? We're do greater than or less than, and that's for the orange. And then we have 2 buckets for the white. Let me just draw away here. There's a white and there's a blue bucket, okay? Greater than, less than. And there's a little bit more to it than this. But an example is the algorithm is asking, where's NVIDIA right now? It is less than its orange. So NVIDIA is going to be in this bucket here. And there's a big pebble in that bucket. NVIDIA is above its half gap. NVIDIA is here. There's a big pebble in that bucket. We're doing something different. Let's put in like another stock, Boeing. Boeing is smaller than NVIDIA, not much smaller, but smaller. So it'll have a smaller pebble, right? So Boeing is above its orange. Oops, I drew NVIDIA in the wrong bucket. Just bear with me here. Let me double check. Hold on. No, I did. I drew it in the right bucket. Don't listen to me. Boeing. Okay. Let's do something different. Okay. Stock chart, Boeing. Hello. Where are the candles? Oh my God. There they are. Okay. So in Boeing, in this example, Boeing is below its half gap. So Boeing would be here, right? But it's a smaller pebble because it's less market cap. Boeing is also below orange, so it's also here, but it's a smaller pebble. So essentially what resilience is doing is it's a kind of a seesaw that's weighing the market cap fluxing above or below. The orange instance, this is gamma exposure. So this is negative gamma. What we call this in the gamma exposure industry, positive gamma. Gamma hedging creates an exponential pressure that pushes market away from it. Below MHP, there's just a natural resistance pressure, some selling pressure. Below hedge pressure, the same thing. The orange is monthly options, the blue is weekly options. Then half gap or the white line is its own particular protocol. That's like the dealers imbalancing the overnight imbalances that they take at the end of the day, the beginning of the day. So resilience is just telling you which way that seesaw is tilting more or less. But the white one has a little bit extra bonus to it. If it's above 0, it means there's more weight in the greater than bucket. Lack of better explanation. So the S&P, while today is an example, the NASDAQ, we gapped up. So this is today's open price at 9:30. This is yesterday's close price at 4 relative to futures. So we're looking at QQQ open and close. If NASDAQ futures gapped up and the majority of stocks have gapped up and are still holding their halfway point or higher, then the index is not likely to fill its gap and sell off. The index is trying to track the stocks, as we told you guys yesterday in the boot camp. It's like a spring that's keeping itself in line with the stocks. And as long as the resilience number is greater than 0, the index is not going to sell off when the stocks aren't. The index just doesn't take a mind of its own. It's usually tracking the underlying stocks. And so it's an arbitrage indicator because we take it one step further, and I'll tell you exactly how this works, is that imagine, I think this is incorrect for Boeing, but whatever. The candle's an update. We take all 500 stocks in the S&P. And this is how I built this thing. So you're going to have essentially the halfway point is always a really strong liquid pivot. And we take every stock and we add it up this way. So you have NVIDIA plus Boeing, etc., plus all 500 companies, right? And then, plus 500, company 500 equals, something. And we're looking at everything all at once. And we actually take it one step further because we try to make it a leading indicator. We know that when anything is gapping up or gapping down, that the open and close price is always going to be high volume. The highest volume is at the open and at the close. So therefore, high volume means liquid pivot. So let's put an L there and an L there. The market is very liquid at the open and very liquid at the close. Liquidity means volume, and volume or high volume nodes means pivot. So it's a long pivot and a long pivot, or a volume pivot and a volume pivot. These are both high volume nodes on a volume profile. They always will be. So usually in between two liquid spots that are really nearby is also very liquid. Now this looks like a dick, but let's be real. So if it's pointing right here in the middle, I'm just kidding. No, but seriously though, it's usually going to be like parabolic through here. And so what you're going to see is that the market's going to just be very liquid inside of this range. Liquid, liquid, and the middle two liquid spots is double liquid. So there's always going to be a lot of volume accumulating at the middle. And that happens for all the stocks, right? And so if the market if NVIDIA is slightly above there and Boeing is slightly below there, what the algorithm does at any point in time is it asks itself, what happens if prices are raising in a stock, it's looking for sellers, or where are the sellers going to be? Well, liquid spots are where all the buyers and sellers are both going to be. Buy and sell, they're going to be both spots, right? So if NVIDIA is sitting at its middle point, if all the stocks are at the middle, resilience will actually be 0. Everything's balanced, nothing's moving. If just one stock pushes slightly higher than the middle, the algorithm will say, where does it need to go next? And the algorithm will say, aha, NVIDIA is slightly above the middle. It needs to move this extra distance from here to here to fill its gap. So the algorithm will say, because NVIDIA moved up another $1, the actual SPX should be higher if NVIDIA were to fill its gap this way. It calculates what the SPX would be if NVIDIA did fill its gap. We call it the SPX implied. The SPX implied is greater than the current value of the SPX as an example. And we actually convert it to SPY, but let's just pretend that it's SPY instead of SPX. We convert it to SPY. We say, what is the value of SPY currently? And what's the value of SPY if that one stock completed its journey? And then we look at it and say, aha, SPY is lagging behind the market because NVIDIA is probably going to fill its gap. It's tilted its own scale, so it's probably going to go up. And therefore, the SPY is lagging behind. Because SPY is lagging behind, resilience will tilt positive. When resilience is positive, it means the underlying ETF is lagging behind the stocks it's tracking. So it was designed this way to be predictive as a leading indicator. So we take all of these implied moves that haven't happened yet and add them all up. Every stock that's slightly above or slightly below its middle, the algorithm will extrapolate the move it needs to do to complete its gap fill to the next liquid spot. So resilience simultaneously is looking at every liquid spot, summing it up, and then asking, oh shit, the SPX should be valued 0.5% higher. And so should SPY, and SPY is lagging behind. So resilience is going to be slightly above 0 to imply that you're lagging behind the stocks that it's tracking. Somebody made $266,000 on XAU USD. Very cool. Was he using Rocket Skater? That's all that matters here. That's basically what resilience is doing. And you guys are used to like price action-based indicators that basically all they do is just track the price. So resilience is a tiebreaker at the half gap. It's very simple. SPY is sitting at the halfway point right now, and resilience is positive, and resilience is positive on NASDAQ. This is likely to support a move to that way. SPY is likely to end up here rather than here at some point. So any dip any dip down in here, I'm betting that SPY ends up here because the stocks are still there. So that's what we're basically doing. And all morning, that's what I'm scalping. I'm watching while the stocks gapped up and pulled back. The seesaw was still tilted positive where SPY was lagging behind the stocks. And while it was being oversold, resilience hooked up and then SPY followed suit. And so did futures. And so resilience by far is a testament to the amount of detail I put into the things I create here. People have called us like the Wizards of Wall Street and stuff like this. We're just mathematicians. We're a little different than the next group, but our shit works very well. And it's because it's looking at mechanical things in the market. It's not just chasing its tail, looking at price and patterns. That's a bunch of nonsense. Don't work. Breakouts, bull flags, bear flags, MACDs, volume profiles. Shit doesn't work. It's never worked. Never worked for you. Never going to work. This is telling you index should be pricing according to the stocks. It's telling you the stocks are up here. So the index won't be down here. So as the index popped below there, I longed it to there. Index popped below there, I longed it to there. As soon as S&P filled its gap, I closed out my trade. I'm not betting on a big rally. I'm just trading this multiple times throughout the day. So that's really what we're doing. What I call the half gap, the equilibrium price between discount and premium zones. I guess if you think of it that way, right. And so, but if you think about what we're actually exploiting is why markets gap in the first place. 10 minutes before the market closes and opens, you have a process called MOC and MOO. And what happens is anywhere up into here, you can submit an order to the market maker and say, I want to buy 1 million shares of Apple at the open at whatever price you open it at. And the market maker goes, okay, thank you for your order. And then they put it in the bucket. And then there's a lot of people like, I want to sell 100,000 shares. I want to long 50,000, sell 1 million. And market maker just collects all those orders. Thank you, thank you, thank you, thank you. And then they open the price where they think they should be opening it to based on where everybody's orders are. There are more longs than shorts. Clearly, we need to gap up. And of course, where the distribution of limit orders are, help them make that decision as well. They gap up to the most liquid spot to keep the market stable. They calculate where's the most liquid spot because there's more buyers than sellers. Well, let's raise the price to find some sellers. Okay. So they gap up and fill everybody at the open price, which is why you get a volume spike. So all your institutions are the ones that are ordering at the open, right at the open. And the same thing happens at the close. Now, if there are a lot more longs than shorts, the dealer matches the orders to each other, but there may be an extra left over. What do we do with that? The dealer shorts themselves, and they short that market, and then they buy calls to go with it or something to hedge. Shorts, or they long futures or something. So they take the imbalance. You might hear every single day there's a share imbalance. Apple has a 200,000 share sell imbalance or whatever at the end of the day. That's what they're talking about. That protocol, 10 minutes before market closes, you can do the same thing. You guys ever notice at 10 minutes before market closes, there's people that call it like, I don't know, a bunch of the gurus and furus made up some shit name for it. Like, I don't even know. But 10 minutes exactly on the dot, the market picks up a lot of activity and starts moving around. That's because all the orders are finally submitted. The dealer is now trying to land the plane at obviously the most liquid spot, but also is being bombarded with buying and selling orders from options expiring 25 minutes from that point as well. So the dealer is like, okay, I know what the orders are going to be at the end of the day. I probably should lower price, but as they're lowering price, people are exercising put options. And so the market fluctuates for those two mechanics. Murder bot, they come up with some names for it, yeah. But really what's happening is the MOC process, the dealer is always trying to land the plane. It's better pre-market because in pre-market, there's no options expiring that people are actually fighting, to happen. So like 10 minutes before market opens, the market doesn't flip shit and go crazy as much as it does for the close because you got people exercising options at the same time. So the murder algo and things like that. But that's really what that algorithm is or what that moment in time is. It's two really heavy things. The dealer is like, okay, I need to raise price because there's a huge buy imbalance. And if I'm the one selling to the buyers, then I'm going to raise price so I can sell higher because I'm taking that imbalance. I'm going to choose to go higher. But as they're raising price, maybe that might shift somebody's calls and the money to force them to buy further. And the price goes up, the dealer may sell to them, and then the price dips, and then somebody exercises some puts, and then it forces them to sell, and the market dips. And so the market's just like all over the place. That's kind of what you're dealing with at that point. And so because of that process, right, liquid spot, that's basically what's happening. And so the halfway point is basically the dealer trying to redistribute that imbalance. Imagine that like at the close of the day, we rallied here. At the end of the day, there was a 200,000 share imbalance on SPY, okay? And then overnight, the market goes, and then again, at the same particular point in time, so the dealer is on the other side of that trade, they're minus 200,000, okay? And then at the morning, they run that same stuff, and there's another 500,000 buy imbalance, so they have another 500,000 they also have to short. So now the dealer's in the whole 700,000 shares. Just making this up. So they're short, they need to cover their short, so they need to find other sellers, right, to come in to take it off their hands. But the way that you find sellers is by raising the price, which is why a buy imbalance to the dealer causes price to gap up because they're trying to find sellers so that the sellers can come in and they can redistribute their risk back to the sellers. They're trying to like neutralize at all times. So in the middle of where this happens, we closed here and opened here. There was a buy imbalance there and a buy imbalance there. The dealer is risk short inside of here. They are neutralizing it with some hedging, but still they're trying to redistribute their risk back to the market inside of the range where the buyers and sellers were at an imbalance. So we call that the redistribution zone. And it's basically the space between a gap. It's not fair value gap or any of that ICT stuff. It's a gap, like a physical gap on the chart. So the place between the open and between the close is called a redistribution zone. And on SPY, as an example, you have that little zone here. And this is probably, and you're only going to learn this here because we kind of created this process. We closed here and then we opened here. So you're always going to have a lot of activity in between the open and close as the dealers are just trying to zero out their position as much as possible. They don't want to take one large side of the market. They want to find the other traders as much as they can. And so buy imbalances cause the market to go up, sell imbalances cause the market to go down. And the reason the dealers are raising and lowering the market is because of buy imbalance. They need to attract sellers to come in to take it off their hands. So they're going to raise price to find sellers. A sell imbalance causes them to lower price to attract buyers. Same process in reverse. A little different. Yo, this is a good day. This is a really good day. Now, I don't know what you guys are trading today, but this has been pretty clean. I'm loving it. I'm also loving the Starbucks. It's kind of nice. So either case, hopefully you guys understand that our job of making indicators is to make something that makes sense. It's not chasing price action. It's like, okay, there's a reason we should be doing this. All right. Why would QQQ sell off on its own if the NASDAQ stocks are doing okay? And as we're seeing all day today, QQQ is not filling its gap. It's actually holding its gap and also holding here because the majority of stocks in the NASDAQ are fine. This white line is a tiebreaker at this white dashed line. It's literally, if it's greater than 0, it's that way. If it's less than 0, it's that way. As long as all these lights are yellow and green, this is a leading indicator, and sometimes a leading indicator by hours ahead of time. All day today, you can watch this market chop around, but your brain is saying every time NASDAQ is down here, as long as this indicator is positive, I'm going to trade it right back to there, into that top part of the box. Now you're playing market maker. It's kind of fun. And I know I was making fun of the market today. I was like, the universe is giving you a second entry, a third entry, a fourth entry. The universe feels so bad for all of you that missed out. And I sung a Britney Spears song. Yeah, but I'm not betting that this rallies the market. I'm just trading the imbalance as it's becoming rebalanced, right? QQQ is overselling when the stocks aren't doing the same. Therefore, it's going to move up to track where the stocks are. Line is greater than 0. Brilliant indicator. I know. Thank you. Thank you. Thank you. The blue is the tiebreaker at blue. It's a similar process, even though it's not a box that you're redistributing in. It just shows that the most of the stocks are gamma positive on weekly options and monthly options. So if NASDAQ were to fall to the blue, my eyes will go straight to the blue line and say, the stocks are all getting a little bit of pressure on the weekly options to long. So I'm going to take long on the NASDAQ. It's a tiebreaker here, just at the line. So all three of my really strong pivots, the zones and hedge pressures, I've got indicators that tell me the strength of how they're going to hold and my confidence in those indicators. So all morning today, you didn't see me sweating. The market fell and it fell here. I'm like, oh, hell yeah, I'm going to dive right back in. I had most of my accounts longer, heavier here just to fill the gap. And that was a super, super clean trade. And that's where I call, like right now is where the idiots are trying to decide which way they're going to trade the market. Should I long or short from here? Doesn't matter. I've got $5,000 in my pocket. Now I'm on the sidelines. So let everyone else play the weirdness. That usually opening move is so easy to predict, especially in a bull market. So right now, S&P is losing resilience. And this is where you're going to be smarter than the next person. I'm not shorting it, but if I were long right now, I would absolutely close my long. Watch the S&P tick up and be green while this is negative. We've been watching it for the last 2 minutes fake out with 2 really strong green candles, and now it's probably going to pull back. Watch. We are now 3 minutes ahead with my leading indicator. Watch this. Watch. Right here, it went like the S&P ticked up while the stocks ticked down. S&P went green and then ticked down. Watch it. Watch it. See, it's ticking up. Watch this. I'm not shorting it though, But I would be exiting along right now because some stock is losing that half gap. Let's see who it is. Watch. Leading indicator. 2 green candle fake outs from here. Here's a third one. I'm not falling for it. And it's Apple. Thank you. Thank you. Thank you. Look at that. Looks like a rally. Maybe I should chase the long. It's a rally. Yeah, Mom, it's the rally. We'll take the rally. But the seesaw is now tilted the other way. I would be very cautious chasing along from here. Now, again, I don't bet that the market's going to sell off, and I could be wrong. But this is a good evidence of the S&P is now deviating from the stocks it's tracking. The S&P is going up, and the stocks are selling off. Apple has lost some steam. Watch this candle fail. More likely than it passes. Even if it passes and I miss out, it's okay, but this is risk management. This is giving me a caution. What happens when it's negative is the S&P usually wants to fill its gap. So let's see if the leading aspect of resilience is keeping me from chasing the wrong kind of long. And even so, if missing out on a rally happens, it's okay. But the risk management is there that I've got evidence that the stocks aren't picking up the same momentum that the index is. Now watch. Let's see if I'm right. Let's see if I'm right. Now, I wouldn't short it either. I never bet against what I see on the market when all signs are bullish. But if the market was sustaining a move here and we're losing power on the stocks, this is now 3 or 4 minutes where it's trying to rally. Watch it have a big green candle here and then immediately fail. Right? Now I'm 4 minutes ahead of that move. We designed resilience to be a leading indicator so you guys can have some actual power. Everyone else gives you lagging, hot, steamy garbage. So, does the indicator use algebra to get to its conclusions? Can I actually use algebra in your life now? This is the question we've asked ourselves since high school. Will we ever get to use that math that we learned in high school? Are we ever going to use the Pythagorean theorem ever again? Ever? The answer is you can cross multiply all day long, baby. Convert your MHPs from SPY to ES all day long. You can now cross multiply to your heart's content. That algebra was not a wasted year of your life. Can I help you with math? The tick value stuff I've ever used, dollar value? What do you want to know? Now, again, here the stocks have turned back up. Maybe Apple has turned back up, and it looks like Apple has turned back up. So keep an eye out because Apple is the stock that is better. So now the fake out was that Apple dipped below and turned up here. So now the market is okay again. We see real-time risk management, right? Got the scare in Apple. Apple is back above. We should be okay. So we're good. But what I would do is, even if I missed out on a move, it would be a caution for me to get out of the way just in case. So now, with everything being repaired, and as long as Apple stays the fort, this is now support again. But what it does is it warns me that something is happening. So it told me where to look. Now, where would I go look, right? We lost this. Something big had to break through. What we do is we go to the scanner. And the way that we do it is we try to find out which stock it is. We can sort by below half gap. Then we can do this. And then we can sort by distance to half gap and see which stock is right on the edge. And like an example, you can see which one just crossed over. And if you did this, Apple would have popped up at the top of the list. Now the market's good. So either case, it's up to your discretion to decide or to watch the proper stock. As soon as Apple bumped back up at 1047, which was here, time to jump back in. So you're betting on so you can actually narrow it down to whatever stock it was right here, 1047. Apple on the 1047 recovered. And Apple is enough market cap to actually create that effect. So right on the edge, you can see right on the edge, Apple is such a high market cap, it actually brought resilience negative. Just gave you a little warning. So right here, exactly here before it moved, Apple recovered, resilience was better, and you could say, okay, I'm fine to jump back in. I didn't take it, but just as an example, that's how I would practice the risk management on that one. Still pretty good. Y'all ready for a giveaway? Man, I love you guys support the stream here. So much fun. I think we have the best music. I think we have the best time. I think we have the best eye doc and the best pickle on the planet. We're like a real family here. Dude, everybody in Rocket Scooter. I love seeing you guys' results. I love seeing you guys' journeys. Y'all are so awesome. Like when I go in here and read what y'all put in this P&L channel in our Discord, it makes me proud to see you guys crushing it. I haven't even seen it in a while, but people come in here. Rich Trader, look at this crazy positive month. Good job, good job. Soldier, positive month, positive month. Good job. I mean, you guys are crushing it. Look at this. Matthias, nice, nice, nice. Dude, love it. You guys are posting like your history and stuff. Aaron, bro, dude. Wow, look at Aaron's P&L. 33K profit with Tradeify, I'm assuming, and 70% win rate, bro. In this environment, my dude, that's fire, man. Aaron's newer to the group too, so I'm very proud. But Aaron's putting in the work though, so I know. Crushing it. Rich is crushing it. You guys are just, I mean, there's a lot of, I love you guys are posting your history in here. Very cool, very cool. Very cool. Dude, Soldier, look at this February and March. Look at this. That's nuts, dude. You didn't have a losing day in all of March? This is all like a week out, so man, you guys are very cool. Very cool. See, it makes me happy to see people out there doing like a lot of really good work. Am I done? Just for now, I'm waiting to see if any other good opportunities play out. Yellow line is usually the end of the day for me. And so once we tap that and resist, it's kind of hard pressed to say that we break it and go. It'll have to spend all day trying to fight to break out. But what I like to do is wait to see if I get anything good by the end of the day. Usually small, choppy internal days like this, I try to look for other opportunities that other people don't see. I've already made a decent amount, so I don't need to take the rest of the move. But I do have something really nice to trade off of. For example, if by whatever reason Trump or somebody says something or news comes out and we just have this really nasty red candle, we've got all kind of pivots along off of. I've got hedge pressure in my back pocket today. In case we do take a nosedive, we can support there. So what I like to do is just wait in choppy days. I've taken plenty of scalps to make my money, and now I'm going to wait. The opportunity is not that good to long to there. It's going to be a hard resistance. It's going to have to fight for hours to break through that. So I don't want to fight with that mess. What I want to do is wait. In this environment, anything can happen. We can have a surprise sell-off, a surprise news event. If it falls to another bull pivot, I'm ready to go. I'll double down my trade there. So usually wait. You know, Trump talks a whole lot. Anything can happen. You wish you were profitable? It happens, man. As long as you stay in the game and you survive, that's the first trick, you know? If you survive in the markets, ultimately you'll start making money. But surviving is the hardest part. And that's the part everyone struggles with, you know? Hopefully, you know, you pick up some wisdom here and hopefully change your mindset a little bit. And profitability doesn't just come overnight. You got to kind of work at it. If you have the platform, the bootcamp access is free, yeah. So 403 is a really hard resistance to break. I don't bet that it sells off, but I don't long into it. Unfortunately, I just kind of scalp through here and I don't long this much. The reward to risk is less than 1-to-1, so I don't do it. Which one takes priority? Monthly hedge pressure is stronger than weekly hedge pressure because monthly options are representing more notional value of investments in the market. There's more people long with monthly options than there are people longing on the day-to-day weekly options to hedge, for example. So monthly options represent a more stubborn institutional position that's holding. Weekly options are like your kind of day-to-day shifting of that. So we should be good. All right, guys. All right, guys. You want to know which one is better on TPT? Let me tell you which one is better on TPT. I love take profit, by the way. You know, you guys keep buying your take profit with our code because they said they will give us twice as many accounts. As a special giveaway, twice as many accounts to give away. I'm bartering with them to, instead of giving me, like, I'm gonna tell you what the influencers out there doing. You guys want me to unveil the scam, not really the scam, but the scheme to you. The more money you spend with somebody's code, these influencers are going out there and they're saying, I make more money for you. You give me more commission or you pay me a monthly salary. They're all doing it. You know what I'm doing? Not that. I'm telling people, I brought more sales to you. I want 20 accounts to give away instead of 10. I'm not asking for more money or bigger commission check for me. I don't need, that's not what I do. So what I do is I negotiate using our code to give more stuff away to you guys. So I've always been this way. I've gotten now over total between our partners, I've got 61 accounts donated to the stream every month. And now I buy like 30 or 40 more. So I do something a little different than the next person. I've never gone back to one of my affiliates to negotiate a salary for myself that's bigger or whatever. I always leverage more stuff. So you guys use our code with TPT, use our code with Tradeify, and they'll be giving us more and more and more. Okay, let's find out which TPT is the better account to do. Let's do. I'll show you how to do the math. Which one is better? Okay, so what you usually want to do is you want to do the price to drawdown that you get. So let's compare to make sure all the rules are the same. So, oh, no daily loss limit. That's kind of cool. All right. And also take profit is one of the fan favorites because it's like end of the day drawdown on your eval. It's just trailing drawdown once you get funded. That's what people don't like. But other than that, TPT is y'all's favorite prop firm. Hands down. Bigger than Apex, bigger than anything. That is by far the fan favorite right now on all of prop firms. People love it more than Top Step. It's a good deal. You know, there's no activation fees. There's a lot of really good things to do with them. And the giveaways, by the way, some of the giveaways you do like Tradeify growth, just remember, if you go funded, but there's no activation fee, then you basically get a free funded if you pass the eval. So those of you, I'm giving away Tradeify fundeds, but I'm also giving away Tradeify growth and TPT accounts that whenever you get funded, you don't have to pay anything to get it. It's almost a free funded account if you pass. So that's kind of the best part about it. All right, let's do some math. You guys ready to do some algebra? You're going to divide the cost per month by the drawdown or drawdown per dollar. So divide 1,500 by 15, and you're going to get 10. You guys remember when we were analyzing the funded next accounts, right? 10 was the best one that they had. And so this one is 2,000 divided by 170, right? That's slightly better than 10. That's 11.7. Pretty good deal. Now, the reason why this is a little more expensive, right? Like funded next is not as expensive. Or a little bit better on the ratio. The higher the number, the better the ratio. But then, of course, you have trailing drawdown once you go funded. And that's kind of like the part people don't like. So this one is 250, 2,500 divided by 245. And that is 10.2. You see how it got worse? You find the one with the highest ratio, and that's the best bang for your buck. That's the simplest trick, as long as all the rules are the same. 3,000, and I'm not going to do the rest of them, but 3,000 divided by 330 is less than 10. And 45 divided by 360, is 12.5. So that is actually the best value. So here, I'm going to tell you, avoid the 100K. Avoid the 75K. Your best value is going to be the 50K, or your second best value on the cheap side is 50K. And your best value is the 150K. So with TPT, again, write this down. Like Matt told me this. Your best value with TPT is the expensive 360. You get the best drawdown per dollar. But not far off is this 50K right there. So do we all understand? 50K is probably the most affordable deal for you guys if you don't want to pump 360 per account. So don't use any of the other accounts with TPT. Does everybody understand what I'm saying? To profit target ratio, don't look at profit target ratio because that doesn't matter. Drawdown is the size of your account. So drawdown is how big the account actually is. It doesn't matter what your profit target is. You're still going to trade the same 1 to 2 E-minis for the most part. If you do this trick, it's basically what you're paying for size of the account with all of the rules being equal. A little more profit targets, an extra day on the market. I wouldn't consider less profit target. Well, let's look at it that way. Let me show you how I would do that. So if I were to use the 50K, 3,000 profit target for 170 versus 9,000 for 360. even in the scaling of this, you can compare the two side by side. Okay. This is less than 2 on that ratio. This is slightly better. So even if you were to do that and compare, the question is it going to give you an extra day on the market? Then maybe so. It might be worth the price. So 3,000. I usually don't consider that to be a deciding factor for me. 170. But yeah, this is equal to, hold on, 3,000 divided by 170 is roughly 17.6. And then this one is 9,000 divided by 360. Okay. Everybody type in Tradeify in chat. Time to do the giveaway. And MFFU later, but we'll do Tradeify first. I'm feeling happy. This one is 25. Okay, so even when you do them both, if you want to compare them side by side, and that's actually a value to you as well. By eliminating the ones that don't even matter, we're not going to compare them. Okay, so when you look at the two together, this also scales better on profit target as well. So the ranking hasn't changed. So even if you did want to consider that, the 150K is your best value. The 50K is your second best value. And what I'm going to do is, since I always do this homework for you guys, I'm going to write this down in my Discord. I give you guys tricks as to like which one is better and why. And I'm going to put this next to the TPT. The reset fees, no. End of the day, drawdown and eval, but trailing in funded. The best account. And again, I'm going to give you guys. Oops. So I'm going to write this in my Discord. I have a channel. The 150K. I'll put these numbers in there. Cost per drawdown. And this is 17 points, 25 cost per PT. And second best is 50K. 11.7 and 17.61. Avoid all others. Oh, here we go. I'm getting a dip here. What's going on in the market? Hold on. Avoid all other accounts. Value not there. So in my Discord, I give you guys this information. Let's see. Is Trump talking? Hold up. Let's see what's going on. Big push down. But yeah, I'm hitting my profit target, right? I told you guys I wait for something, right? Somebody's saying something that's going on. China, anything going on here? Crude oil, nothing. Market just tanking out. I don't hear any news. Nothing. Maybe European selling markets. But let's see. Like we have NASDAQ hedge pressure nearby. Resiliences haven't budged. The market's throwing me a second bone. Okay. I'll take a long ride at hedge pressure. Let me let it play around. I could maybe take some risk in half gap. Nope. Resilience is negative. Now we are probably filling the gap. So I might get a better entry down at blue. I love it. Okay. Watch this. Resilience is negative, guys. So right here, the market is likely to respond by continuing to pull back a little bit further. I don't know what's going on or why we're selling, but hey, like I said, I'm safely on the sidelines. Part of my strategy is learning when to be on the sidelines. Negative resilience is pulling back. Some stock just broke through, and let's see which stock that is. Man, I love you guys are here on the stream while this stuff happens. It's so nice. Who is the big hitter? Tesla. Okay, is there news in Tesla? Tesla's shitting the bed right now. What's going on, Tesla? Who else? I love Apple. Tesla and Apple both. Why? Microsoft as well. Little pre-expiration profit taking. No, Microsoft not yet. We're looking for stocks that jump through half gap. So not there yet, but let's take a look. Negative resilience indicates we're going to fill the gap. So this is actually likely to go lower. Cool. All right, guys. You ready to do the thing? Y'all ready to do the thing? All right. Are you ready to do the thing? Oh, wait. We'll have to do my fun and futures tomorrow. Let's just do 2 Tradeifys then today. 2 Tradeify growths because I need to get the accounts approved from them. All right. So this green bump up might be a fake out. So be careful here. But I don't know what happened on this, but let's wait for lower lows. Okay. Half cap trying to support with negative res. Not going to buy into that. This is the one time. Now resilience is a leading indicator. I'm going to trust it. I'm not going to chase this long here. This ain't a dip to buy, you guys, for me. All right. Type in Tradeify. Type it in, type it in, type it in. Type it in, type it in, type it in. Bum, 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 bum. You only need to type it in one time, guys. I promise. You can only enter it once. Type it more than once. It's bad luck. All right, all right, all right. All right, all right, all right. All right, all right, all right. Okay, hold on one second. Let's see what's going on here. You guys, and I'm gonna tell you, we give away close to probably be giving away close to 100 accounts this month. That's crazy. The more you use our code, the more I broker more accounts to give away, which is amazing. So here's what I want you guys to do. If you go to my Discord, everybody go to my Discord really quick because you have to be in there anyways once you win. I give you guys the best explanation. I'm sorry, I'm going to fill this out further as to which accounts I think are the best and why I think they're best, what the best feature of each firm is, and what the best account is to get each firm. The one we didn't take profit today, I detail which ones to do and which ones to avoid. So example with TPT, as we just showed, 150K is the best value. The second best is the 50K. So whichever one's more affordable to you is the right account to do. And that's basically using a little math to kind of do the work for you on value not there. The whichever of the two above is more affordable to you, go with it. Okay. So I'm giving, and I'm going to do this for all of them. The firms we work with, Funded Next, Take Profit, Tradeify, Funded Futures, Futures Desk, ETF, and Apex, and firms I don't support and why. I'll tell you which ones are off the list, and top one is a fast track waiting to happen. So I wouldn't go anywhere close to them personally. Myself, I smell risk from a mile away. They're strike 4 with me. I gave them so many chances. With those guys, multi-level marketing, to bring in influencers, pressuring sales tactics from like loser influencers, like these medium-sized, small-time influencers coming to me like, hey, bro, man, you want to get in my downline? I'm like, who the fuck are you, man? Never heard of you before. These little Twitter wannabes. So anyways, that was kind of weird. Me getting pressured by somebody to literally jump in their downline. I'm just like, okay, this is scammy. Sounds weird. But anyways, I get their marketing thing. But then like rug pulling their rules and forcing people to take refunds because they're like, sorry, we're changing the rules on you. You can take a refund if you don't like it. I'm just like, you should change your rules going forward. People that already adhered to a certain rule set, you should be able to stay there. And then everyone going forward that signs up have the new rules. That is fair. But that was kind of weird. So that was like strike 2. And then, you know, once Brett Simba was making commentary about that, he's like, this is kind of weird and unfair. You shouldn't be doing this. And then they were like, well, we're going to ban you from trading our firm because we don't like what you're saying. And that was strike 4. So they got on the shit list at that point. Downline, multi-level. Yeah, that was some idiots fucking reaching out to me, trying to give me their downline. Like, who the fuck are you, kid? You trade place with me in a heartbeat. You wish you were me. Like, I'm not going to get in your downline and work for you. Kidding me? An idiot with 2,000 followers on Twitter. Fuck those guys. Like, seriously, man. Ty's in here. Bro, you know, right? I'm just like, who are these kids reaching out to me? And they act like they're big and whatever. And I'm just like, that's kind of disrespectful. Like, yo, bro, it's like the next best thing. Yo, you want to get in on this? Like, I'm just like, I would understand if it's somebody like bigger, reputable coming at me, but I'm just getting like pitched at by these like medium tier influencers. I don't know. All right, guys. So anyways, until they build some trust with me again, they got off the list. So I actually emailed them and told them to remove my affiliate code to make sure I don't get a sale with my name attached to it. That's how serious I was. Would I get in my downline for Rocket Scooter affiliate commissions? Dude, I joined that multi-level marketing in a heartbeat because I trust the source of that, because I know the creators of Rocket Scooter are very passionate people that do their due diligence making shit. All right, y'all ready for this? Are you ready for this? And nothing personal. I hope their firm succeeds. Like, I hope every firm succeeds. I'm not on a campaign. Somebody was like, one of the influencers like, bro, are you on a campaign to bring these guys down? I'm like, no, I have an opinion just like anyone else. I would go anywhere where there's value. I would love nothing more than, if I hate a prop firm, to literally go in there and steal all their money. That's what I would do if I wanted to bring them down. I'd bring them down by milking their pocketbooks. Like, I have no desire to see anybody fail, but I have a desire to present the truth to the public, and that's kind of what I committed to. All right, guys, type in Tradeify in chat. 2 Tradeify growth counts today. You know what I'm saying? I just get the willies. I don't need to be like, come on, bro, get in on this, bro. Like, yeah. No thanks. A little bit. A good firm will come in and say, this is what we offer. This is the value proposition, and this is what we like about it. And then I'll say, oh, this is what I like about it. What's the value prop? And I didn't see a good value prop other than a competitive straight to funded program, which seemed good at the start, but with the rule changes, I wouldn't get in. Last thing I want to do is waste a month of my time and then have the rules change on me and tell me, well, you can take a refund if you don't like it. That to me is the downward spiral about to start. Okay, you guys ready for it? You guys ready for it? You guys ready for it? Oh God, that's loud. Ooh.
All you need and all you own. The hedge pressure resilience. Support in the bull zone. Everything rocket scooter. All you need and all you own.
Tradeify in chat for Tradeify growth.
Rocket scooter's the best. Rocket scooter. Rocket scooter's the best. Rocket scooter, best system in the world. Rocket scooter. Rocket scooter. Rocket scooter. Best system in the world. Rocket scooter. Rocket scooter. Rocket scooter. Rocket scooter.
Lenny. Lenny the Winnie. Lenny, just type something in chat, baby. Let's go. Lenny, let's go. That'd be kind of cool if the next winner was somebody named Carl. You know what I'm saying? Like Lenny and Carl from The Simpsons. All right, Lenny, let's let the timer catch up to this. I saw you typing. There you go. All right, next one. Can we get a Carl up in here? I'd love for Lenny and Carl to be the winners. Congrats, man. I'll tell you how to get your account a little bit. So market's rolling with negative rush. Just be very careful on this one today. This is a fake out, I think. I'm not shorting it, but I'm avoiding the long. Okay, keep going. We got song number 2. Psy FX, man. Congrats. Okay, hold on.
From the bottom, now we analyzing trends. Wrist tight, stop loss, never break, never bend. Candles talking to me, I don't need new friends. Rocket scooter running plays, we ain't here to pretend. Numbers don't lie, but emotions do. Fear and greed, man, they cloud your view. Stick to the plan, we gon' see this through. Matt got the blueprint, let me show it to you. Yeah, trade smart, no FOMO, no chase. Money comes.
You have to type something though. Aaron, bro, by the way, I know you're late, but I saw your performance stats in Discord. Dude, you've been crushing it this month. I'm very proud of you, man. All right, we need a Carl. Sai's not here. Oh, Sai's here. Finally. Okay. Wait, hold on. Maybe we should give away one more. Hold on. Okay, Lenny. Sai. Hold on. You guys want to do, how about 2 futures desk accounts? All right, let's do 2 futures desk accounts. All right, hold on. Let's do these. I want you guys to check these guys out too. They're new to the list. I've never used them before, but I'm about to because I love what they do. Futures desk. Everyone type that in. So what they do is they have a cool new program. Like I said, I look for things that are different than somebody else, and we'll do 2 of these guys, okay? Futures desk. They have a cool new program that does you can select your own eval, which is very cool. They've got a bunch of sliders. You can move them around and choose which eval you want, and it's competitive prices. Actually really good. But then when you go funded with them, you go straight to funded. This is what I'm hearing. It's a real, you go straight to live, not straight to funded. You go to live with these guys like a real prop firm, and I found it to be fascinating. So I'm not gonna lie, I haven't used them, but I'm gonna trust. Oh shit. But I'll show you guys them in a second. But yeah, I recently introduced myself to them, and they are a bunch of tech geeks like me. I talk to developers. They're into building something new. They're not just a bunch of schmucks putting together a prop firm. They're people like me that are building something cool. And I've had in-depth technical discussions with these guys, and I like them already. They've got good head on their shoulders. They're doing something tech smart. Okay, tech smart. Man, I love that song so much. Tech smart. Good job. Okay, so you're getting a $200 credit with these guys. You can spend it however you want. Just type something in chat. And I'm gonna give you guys instruction just a little bit. How's Pickle doing, by the way? Discipline. This is the only way. Negative res, guys, with the market pushing up a little bit. I'd be very careful on this. But again, I'm not shorting it. Stay on the sidelines a little bit. I thought the pick your own prop firm stats is a pretty cool thing. Like, let me show it to you guys real quick. But I think, like, you know, I have so many firms that I'm using and stuff. AD, congrats. Okay, type something in chat. I have so many different, let's play the hedge pressure resilience song one more time. Love it. Okay, so I can't use everybody all at once, clearly, but I do like these guys are offering. Okay, cool. Good job. Lenny Bob, I got your friend request. Thank you. AD, type something in chat. This is for a $200 credit with Futures Desk. You can spend it however you want. All right, contest is over. That's the last one. We gave away 4 accounts today. We'll give away like the 4 to 5 accounts every stream now. So congrats. Okay. I'll give you guys instructions in just a minute on how to do this. Where did you get that cowboy hat?
What? Oh, one of my conferences was cowboy themed. So they were like sailing this way.
What kind of cowboy themed was it?
I don't know. It was like a red
Brokeback Mountain cowboy theme? I actually like it.
All the dudes and the girls were all wearing it.
Really?
It was, yeah, everybody had
Let me see. Is there like a battery pack on the inside? There it is. Yeah. Okay.
Do it. Other way around. Other way. Okay.
Oh, yeah. It is shaped pretty well like a real cowboy hat. Alright, partner.
People who are like mistyping future stuff.
Hey, right, partner. Mm-hmm. Very cool. Go on, get.
Don't get. You look like your brother now.
Go on, get. I do look like my brother, don't I?
Yeah.
My brother is like,
Super
he's definitely the East Country Matt.
country, yeah. He looks exactly like
We look
Matt.
exactly the same, yeah.
Even though he's younger, he acts older.
That's true. He's the more mature of the two of us. That's what he's talking. Go on, get.
Mm-hmm. Yeah.
All right.
Giveaway's over, guys.
Giveaway's over. Yeah. Let me show you guys what Features Desk is. Again, they're new to the list. I haven't used them yet, so that's the only thing I'm preempting you guys with. I haven't used them, so and they're not paying me or anything, so this is not endorsed by them or anything. This is my personal opinion. New to me. They've been around for a while, but new to me. And I discovered them because they showed up on my feed, and it was like, post your trading setup. And I posted my trading setup, and they're like, congratulations, you won. So I apparently have the best trading setup out there, and I won. They were giving me like, some kind of, thing. And I reached out to them like, I don't want the prize, but I'd like to hear more about what you guys do. And so essentially what you can do with this group is design your plan, which I thought was super awesome. And you can come in here and basically, and again, not endorsed, not paid. I just said, hey, you guys, I'd like to get you in front of my audience. It seems like you had a cool thing. And then when you pass, you go straight to a live account, more like a real prop firm, which I thought was cool. Again, I don't know if all that's true. That's just what I've been told. I haven't read up on it, all of it yet, but I don't know all the different pieces of this. But this is what people are telling me. You have an account with them. So road to success, right? When you pass, you go straight to live. Is that correct? That's what people told me. I said I would give them like a proper deep dive at some point when I actually use them myself, maybe next week. Is it Project X? And it's Project X. Basically, you can choose, like, what do you want your max loss to be? Your number of contract size, the minimum days to pass, and you see it just changes the price at the bottom. How cool is that, right? So you can design a plan in your budget. Max loss is your drawdown, so you want to do like a cost per drawdown sort of thing and find where it scales the best and find the best one for you. Do I like Top Step? I do like Top Step. I just don't, they're not on my list of who I recommend anymore, just because while they are one of the best out there, there's so many more, I think, better options for specifically what you want. Top Step is still top tier. They're not a bad firm at all, but I kind of don't like supporting them because of all the things Top Step is trying to do outside of prop firms. They're trying to like regulate the industry and stuff. And while they're going to become brokers, I think that's the new thing that they're doing. They are setting a trend, and they'll always be a mainstay. But I feel like there's just so many better options for like, like straight to funded. That's why I like Tradeify. But Top Step is really good. Nothing bad against them. I just don't support them. So nothing bad to say about them. You don't go straight to live. After you pass, you go to sim until you make your buffer, and then you go into live with that amount. Oh, yeah. Okay. That's what it is. Okay. And that to me is by far where the future of the industry is going to be. By the way, you guys, I talk to people on the inside, prop firm CEOs all the time. The speculation is this, that if regulation were to change anything about the prop industry, what would change is that sim to funded payouts would go away. And so what all these prop firms will have to do in the worst case scenario, if the regulation were to change, or to go to that, basically go to exactly that, where you build a buffer and then you go live and then you actually get a real account to trade with. That's completely legal and totally fine. The whole gray line, gray area sort of thing is sim to funded payouts. The only thing the regulators could ever change would be you can't do that anymore. That's bucket shop. You can't pay people for paper trading. So every firm will have to do what Futures Desk is doing, which I think, and I always preach, is the future of prop firms. So it looks like they're ahead of the game. That's kind of cool. So the yellow line on NASDAQ is it's called illiquidity pivot. Resilience is still negative, but going up. So now it shows that some of the stocks were delayed. So now resilience is in a better spot. Yeah. We got a little scare out the door where the index actually moved faster than some of the stocks did. So that's thank you, Road to Success, for letting me know. So that's pretty cool. I actually love that model because that's the one model that doesn't bankrupt the company. If you have that model, you will never become insolvent because your risk is capped. Tradeify caps the risk by capping their sim to funded payouts. That's totally fine. A firm that builds a buffer and moves you straight to live is what every prop firm will be in 5 years. Mark my words. The paper trading payout party is going to come to a screeching halt in the next couple of years once the bubble pops. Regulators are going to change this. There's no way this is going to last forever. So if they do, Futures Desk is out of the curve. I love that model. I love it. Okay, anyways, cool firm. You know, give them, if you guys are using them, do you like them, Road to Success? Like, what is your honest opinion about them? I haven't used them yet, but it seems pretty straightforward. And the guys I talk to sound just like me. Tech geeks that want to build something cool, new, modern, and different. Just like me, like want to reshape the game, shape the industry. Very highly technically skilled folks, like very good programmers. I talk to the developers of that group even. Really, really cool. Remind me of me. You also drop the sim brokerage, contact their support. They'll set up an interview. If you're satisfied with your stats and interview, you can go directly to live. That's pretty dope, actually. I do like seeing an actual prop firm in the prop space. So no rules, and the payout with Tradeify is so fast, you're spoiled. Dude, Tradeify is great. Every firm has a plus and a downside. And the only downside to Tradeify is there's a payout cap. So every 10 days, you can only take 3,000 per account. You can only take 80,000 total, and then you're done with them. New to group, Cameron. Super grateful to be here. Thank you. You have Rockets here, but do a lot of charting on TradingView. The gap indicators, previous day's close, and today's open. Yes, in the equity side. So 9:30 open, 10 o'clock close, or 4 o'clock close. Sorry. You really think this paper trading payout is going to be done soon? I don't say soon. Soon is more like in this decade or less. Probably because, just like anything else, once you have too many bad seeds in the bunch, bad apples in the bunch, the regulators start to take notice. What they're going to do is realize that they're missing out on a whole lot of income, and the exchanges as well, by not forcing traders to go live. If you force traders to go to paper trading profits, who's not making commissions? Everybody. The CME group's not making commissions on exchange fees. Your broker's not making broker commissions. Clearing firms aren't making clearing commissions. And NFA is not getting their NFA fee. Oh, 100% the NFA wants their fucking money. So if you ever look at a real futures account broker statement, every trade you make has an IB or an FCM fee, a clearing fee, an exchange fee, an NFA fee. You're paying everybody pennies to every trade you make. So I'm sure the NFA doesn't like people sitting there and paper trading for profit and not paying their fees. And every clearing firm is probably complaining. Everybody's lobbying to CFTC, I'm sure, to get it changed. Is likely going to be changed because SIM-funded payouts is technically illegal. If you really were to read the language of what trading is allowed in this country, but somehow it skirts the rules because it's a consulting fee you're getting paid. And all they have to do is fill up the gray area by putting bricks over the hole and then say, no, you must become a brokerage. You must become a prop firm. And you must move people to live. That way you pay real commissions and everybody gets their cut of the pie. This makes all the sense in the world. And so the reason I know this, and I'm going to tell you because of this, because last year, me and some other really big influencers, I'm talking like the biggest of the bigs, we meet and chat all the time, different times. We're speculating that this is going to happen in the next 5 years because everyone is leaving a paper trail of their movements towards that. Top Step, a lot of the people working at Top Step went and got Series 3 licenses. Why would you do that unless you become an IB? We found that Top Step filed with the regulators to become an IB. We also found somebody on LinkedIn who actually just posted that they are the director of brokerage services at Top Step. So they're going to put two and two together. that everyone out there is trying to become a broker because the actual live account commission model is about to come to fruition at any point in the future. Now, no one has an exact date, but it is speculated amongst the bigger bigs out there that the party will be over within 5 years. It's good for you, though. Don't think it's bad. You'll just get paid a real brokerage account if you're making money, which is perfect because the taxes are better for you. You actually want this, by the way. And it's less risk to the prop firms because they're not out there paying you out of their pockets sim-to-funded profits. So it's less risk for them, better taxes for you. It's win-win for everybody. But the difference is you're not going to be able to bank out $1 million payouts by 20x copy trading Apex accounts, right? That's going to all go away at some point. So again, 5 years or less, I'm speculating, but everyone is going to the brokerage model because they want to capture a piece of the pie. Imagine Top Step moving you straight to live instead of paying you unfunded. You build up a buffer, they move you to live, and then you have a fixed loss of what they invested in you. And then every trade you make is through their brokerage. They're taking commissions from every trade you make. It's by far stupid as a prop firm owner to not be in that model. If I were to start a prop firm, the futures desk model, that model is the model that will survive regulation change. It is the model that will survive your firm going insolvent. It is by far a brilliant model, which I talked to these guys and they all sounded smart. They seem to be ahead of the curve, and Top Step seems to be leaving a paper trail that they're leaning in that direction too. That will be the status quo. Your prop firms that will be brokers will be your bigs going forward. So you want to jump in on a firm that's doing that, you know, by all means. But until then, enjoy the sim-funded party. Trust me when I say all the bigs are prepping for that. We're prepping for the potential of that. If Funded X has no profit split, does that tell us they plan on making all their profit from people failing the evaluation? So let me explain something to you, cheater. Profit split is not really a profit split. It's a fake thing. In a sim-funded account, if you were to make a 10K payout and they say it's a 90% profit split, here's how prop firms work now. You are trading, the prop firm sells subscriptions. Money comes in, they do payouts, money goes out. Whatever's left over is their profit, okay? When you make money from a prop firm, you're taking money from their pocket, putting in yours. You're not even touching the futures market. When you have 10K with the 90K profit split and they give you 9,000 of it, they're just vaporizing $1,000 of your profits. There's no profit split. You didn't actually make anything. They're just reducing your paycheck from their own funds. So all the firms are doing that, cheater. So in live, if there's no profit split in live, that's different. So live is different. I don't think there's a no profit split in live, but I need to go check on that because that wouldn't make any sense to push somebody to live and not have a profit split. The reason to have a prop firm and push you to live is to take a split of the profit. So I would reread that. I don't think Funded X does live accounts now that you mention it. I don't think they do live yet. So anyways. But yeah. So in the actual so in the actual like payout split, they're just paying you less money. Like Tradeify just takes 3,000 off the, like doesn't give me 3,000, sorry. Gives me 2,700 for every 3,000 I ask for. They just decide to just pay you less. The profit split in sim to funded is just a scheme for them to lower their risk further. And they all do it. It's not like it's a bad thing, but when there's a profit split while you're funded, it's just a scheme just to take less money. You take less money from them. You're not really, they're not splitting, they're not making money off of your trading. They're not actually really trading anything. You're just making money against the casino. Purdy has been doing it for a while. Yeah, a lot of these ones that I've never really used or heard of that are popping up have been around for a while that are doing the live model just like that. They're real prop firms, and so that's really where the industry's going. At some point. There's a lot. Gold Digger, Purdy has been doing it for a while. There are prop firms that have been around since the 70s and 80s. Like, this is not a new technology. Just the idea that they're marketing to sim to funded traders and simfluencers are marketing them, it seems like it's new. There are firms that have been prop firms in New York for 50, 60 years doing the same thing. You go, you audition, you trade for a little bit if you do well. run some capital, they'll match you, then you trade with y'all combined funds. It's a thing that's always been around. It just is now marketed to people since COVID pretty heavily. Sounds good if you're already profitable. Yeah, it does. Sounds good if you're already profitable, right? What size accounts do I trade? So I'm using 150K Tradeify straight to funded. I have 5 of them. So those are the ones I trade. Nice and clean. Walking right up to the yellow line a second time. Party has intraday drawdown. Yeah, I don't do intraday drawdowns. I think that trailing drawdown is by far the least cool thing to do. I don't like it. It's so hard to pass. Yeah, you're not, as Fletcher says, you're not trading a live account in some of them, so they're taking 10% of nothing. Exactly right. It's just an expense. Yeah, it's an expense split. So basically, that's how they do it. But it's totally fine. I mean, it's a risk lowering step. Resilience is still clean and good. Market nice and tidy. I wouldn't be shorting anything. I wouldn't be doing anything. The market's trying to dip. And again, remember, as I told you guys, don't ever underestimate how stupid a bull market can be. There's not going to be a lot of red days along the way. It's kind of looking like this. And I think this was back in 2018 where you just have up, and some kind of consolidation that turns green every day. I'm ready to wake up and long this on the daily. I'm not ready to short anything, touch anything. This is the start of a stupidity rally. Trust me when I say we are going straight up to all-time highs without even stopping. There may be some red along the way, but I mean, I would bet that in the next month we're at 6,500. I'm kidding you not. Europe did it. There's no reason we wouldn't pick up that momentum as well. Nothing is bearish. Everything is super bullish across the board. Every dip is getting bought up, even with the caution of the stock selling off. People are still gobbling it up, even when it's bad looking. So people are even buying at a disadvantage just to get in. So it's telling you a lot about the market. TopStep has no affiliate commission. That's why you don't recommend it. Actually, I've actually never worked with TopStep. So I know that they don't do affiliates, but that is also not why I don't recommend them. But I've never worked with them. The reason I don't work with TopStep is because I don't agree with Michael Paddock setting up an SRO to regulate other prop firms. So I don't recommend them because I don't want to be part of I don't want to support a monopolistic agenda, to be honest. I still have my TopStep accounts still active. I just don't know. I don't really spend a lot of time trading them. I kind of don't agree with the press to form a regulatory organization led by industry leaders. And I also feel halfway insulted that they don't reach out to people like me and other people with experience in the industry to ask our opinion. I think that they owe us an audience. The people that are big, the people that are influential, the people that have platforms, I'm a platform developer in the industry. Nobody from TopStep has ever reached out to me, even say, hey, I want to introduce myself. You're a big guy in the industry. You know, let's talk. Can we get you working on this? It's like a prop firm fucking monopoly. And I think that that's silly. They should be consulting with bigger people out there to get opinions from the public's point of view. The idea that they're doing something for your benefit and not even polling people or asking people for their opinions or even advisory. For an SRO, they should make an advisory panel of people like me and other affiliates or traders that are known in the space, because we're not making profits off of the failure. Well, I guess an affiliate we would, but we're not like a prop firm making a profit. We would make sure that it's fair for both parties. As somebody in the middle, like a regulatory organization should have people like me in it, because I benefit both if the prop firm succeeds and if you don't get screwed over. So I kind of can float in the middle to say the healthier they are, the better my affiliate check would be. And the better experience it is for you, the bigger the affiliate check would be for me as well. So I have incentive to bring customer to prop firm, then I have the incentive to be in the middle and be the leader or a member of the regulatory organization. they should make a panel of people who make rules for prop firms to follow. I don't like the idea that they're trying to make the rules for prop firms to follow and then using Top Step X as like a bargaining chip. If you want to make a prop firm in our space, you must follow our rules. That's got like Apple written all over it, you know, where you have to buy your phone and Apple charger and Apple case and you can't escape like, you know, the ecosystem if you wanted to. I think that's a little too much consolidated power in one person's hands. So my thought is you bring people that are in the middle that know about the space and they're not working with the prop firms to be a regulatory organization. But yeah, that's just my opinion. Why they never reach out and they're like, hey, let's get Tradeswing Matt and let's get, you know, Pat and let's get Rips and let's get a bunch of you guys together and y'all can set rules for the prop firm industry much better than we can because y'all have more of a neutral take. You have incentive for both sides to succeed. We only have incentive for traders to fail. And I don't think the idea of edging out your competitors and their creative rules makes a lot of sense because you're standardizing the industry based on how you see it. And I think that's very, you know, utopias always fail. So I don't know. That's kind of why I don't really support them. I don't like the direction they're taking in the bigger sense of things. So FX Entropy, I run the largest paid futures community on the planet. So I'm the largest futures trade room in existence right now. There's nobody bigger than us by subscriber base only as far as paid members. So I might not be the biggest YouTuber. I have a trading platform and a financial marketplace. I've got in my financial marketplace hundreds of vendors who run their business through my company. So even on top of that, like we're very substantial in the space. I may not be the biggest YouTuber. I might be slightly bigger than big, but every single one of these people are under our umbrella as well. I've got John Carter working his businesses through all these people. They're affiliated with us as well. So the net influence customer base that we have in our marketplace is many hundreds of thousands of customers. So yeah, our futures community is the biggest one out there by a long shot. By paid customers. But yeah, but that doesn't matter to me. What it means is that I have a lot of people that are looking up to me to see me do the right thing. And it would be cool if a self-regulatory organization wasn't made by the heads of prop firms. I think that that's a little too much power consolidated. They should use people that are business owners in the industry that aren't prop firms as their regulatory body to govern both sides, benefit of both people, like a neutral, right? That's what I think. Anyways. Yeah. There's people that are big in like all different industries. So, you know, our thing is that we have, you know, like community leaders that work under our umbrella as well. So it's like there's a lot of people out there that want to make sure that the prop firm industry is fair to them and that things are kind of, you know, and I agree that, you know, you need a regulatory organization, but I just don't agree that it should solely be made out of prop firm owners. That's a little bit colluding and unfair to you as a customer because you don't want Top Step sharing your customer information with another prop firm down the road. That if you got banned at Top Step, then no one else opens an account for you because they're in the network, you know. It's really where you want to be. What's the maximum points you would allow for drawdown? 50 points. I do about 40 points on NQ, yeah. The idea that companies should consult you is bizarre. No, it's not, because if you're building a space company, Elon would say the same thing. Why are you not consulting me? I develop in the space environment. Like you are a creator in that space, and that's the goal of a regulatory organization. Is somebody familiar with the space, somebody influential in the space, somebody that builds in the space, and somebody that has the ability to be fair in the space. You're very small-minded if you think that's narcissism or ego. It's required. If I had a fucking degree in mathematics and I see a bunch of idiots out there trying to sell math courses, I'd say, you need to consult me. I have a PhD in this thing. A doctor would say the same thing. Oh, you're trying to sell vitamins? You probably should consult me. I'm a doctor. It's called being a professional in the industry. You should consult professionals that have relevant experience, but also has the desire to be neutral and not profit from the sale of your vitamin that cures cancer, or the sale of the toothpaste, or 4 out of 5 dentists agree. Well, you consult them as well because they're dentists and you're selling a product for teeth. You're selling a product for traders. You need to consult trading leaders in the industry. I'm the 4 out of 5 dentists. I'm 4 out of 5 traders. Same thing. And whether it's me or anyone else, it doesn't have to be me. It has to be people like me. It has to be people in my shoes. Same boat. People that are in the middle. Prop firm affiliates. You need a panel of those people running an organization. Even if it's not me, it needs to be people like me. So this is not a narcissistic bid to put myself as king of the prop firm SRO. It's saying affiliates are the perfect seats for the job. 4 out of 5 affiliates agree. Trading with Matt and day trading with Matt. Oh, trades by Matt and day trading with Matt. Oh yeah. So yeah, I know it's kind of similar, right? Kind of similar. It's not like them because they don't consult what's bizarre. Yeah, no, they're selling you toothpaste that they're not asking dentists the recommendation if it's going to kill your teeth. Yeah, that's a bad idea. And it doesn't take somebody with high IQ to understand that's a bad idea. Right? I think it's terrible to not consult people for what they think is fair from the customer perspective. And if it's only businesses setting organization to protect the interests of the business, it's very unfair to you as a trader. It's very weird that you would have any pushback to somebody that's actually wasting their fucking time defending you and your benefits. That's very weird. So good luck to you. And hopefully you don't get scammed out there being on that side of the fence of not thinking thoroughly like that. I'm working for you guys to make sure you get a fair experience. That's all I care about. I would say in general, you would want people like me to be consulting these firms. And the fact that they don't reach out to me or anybody is insulting to us as a community. All of us are insulting. Was the other dentist recommended? I know, right? I wonder what the other dentist ever recommended. We never actually asked that question. Yeah, it should be a split panel where the majority of voting shares should be people that don't have stake or shareholders of prop firms. So, like, if you had a voting panel of 10 folks, it should be 7 people could be prop firm affiliates or industry leaders, and then 3 people should be prop firm owners. So that way there's a say from both sides. It needs to be a fair voting panel. Yeah. Because I don't have any incentive for prop firms making profit. I have incentive for you. I have incentive the more prop firm accounts you guys buy in my position. So I want to protect a healthy environment for everybody because sales are big for me. I don't care if the prop firms fail you guys more or not. I care that they don't go under and blow all you guys up. That's what I don't like. Don't pick on Alice. She just doesn't understand. Okay, then you go ahead and bow down to the top step monopoly and don't let anybody speak up against that because that's narcissistic. No, it's called being a professional. SROs in any industry are well-rounded organizations that represent all entities together. Maybe you should go research that. Oil and gas has self-regulatory organizations. Everybody has them. Banking has them. I mean, FINRA is a self-regulatory organization. FINRA is not a panel of CEOs of TD Ameritrade and Charles Schwab. It's like absolutely stupid to think it should be. Like, yeah, it's like Amazon saying we don't need to abide by the law, we'll self-regulate and create our own laws. Especially, yeah, and so I think that's kind of like, Top Step doesn't pay you and coincidentally you don't like them. Sounds like somebody works for fucking Top Step. Oh my God. No, I don't support. Even if they paid me, I wouldn't accept a check from them even if they offered to pay me. I don't support that. I think that you should I think that's unfair to the customer. So I have a question to the one person that's over here. Can you I was gonna say something mean, but I'm not. I'm gonna say one thing. Why don't you tell me the best type of regulatory organization? And by the way, your local gas station is pissed that Chevron didn't ask for the opinion on how they sell gas. Well, Alice, now you just proved how much of a fucking idiot you are, because there's an organization called the API, the American Petroleum Institute, and that is an SRO that is made up of industry leaders and other people that aren't CEOs of Chevron that do get together and tell you how your fucking gas is sold. So yes, even your gas as a group of people that get together and tell you how the gas is sold. Jesus Christ. There's also a government agency called the EIA. The EIA is the government version of the API. The API is an industry version of the EIA. You have a government number, and here it is. Here's the industry that gets together and tell you how your gas is sold. Jesus fucking Christ, girl. Oh my God. And this is not made up of the CEOs of gas companies. God. I've actually gone to these conferences. That's how I know these guys exist. Some people. Hell, you want to apply for membership? You can go become a member. You can actually become an officer. You can actually grow through the organization. I mean, there's ways to climb in this. Oh my God. Anyways, sorry for taking my time out looking out for you guys as customers. Jesus Christ. That's very narcissistic. I think I would nominate people like Tyler. Tyler's in here. Tyler, you know, like a lot of people that know the space. That should be the organization. The people that can consult both sides of the field. They have incentive to be fair. They incentive to keep everybody happy. I found it insulting that TopStep contacted nobody. Let me rephrase what that. Not just me, but anybody. They contacted nobody that I know to ask them to be part of this. They said, if you're a prop firm owner in the space, let's get together and make an organization. And from that point forward, I no longer supported them. Thanks for playing, though. Have you seen The Landman? I haven't seen it yet. So every Wednesday morning, you get EIA numbers in oil, right? We have one this morning at 9:30. Every Tuesday afternoon, you get API numbers. Both of them are independent check and balance self-regulatory organization or regulatory organizations. The EIA is created by the government, the energy institution, or I don't know what it stands for, but essentially you get these every single day. And I'm making fun of you, but it's silly that you would be. It sounds like you work for TopStep. I don't know, but I would say that it's insulting to me as a person in the industry that they didn't spend any time asking industry leaders to be part of this organization. So here's your government agency, right? Every single morning at 9:30, you get your crude oil inventory report from the government. And also every Tuesday in the afternoon, you get your check and balance because, you know, the government, whatever, but you also get an industry leader called the API. They release their crude oil inventories as well, as they are a self-regulatory organization in the oil and gas world. And so, like I said, it's a well-rounded organization that is designed to create standards. They create all kind of standards such that, you know, the companies can actually benefit very well. It actually doesn't hurt the consumer at all. The benefit of having a group like that come together, industry leaders are coming together and standardizing all kind of things to make it actually cheaper and easier for you to get fuel, and safer, especially safer for it to be produced. So that way people don't die, because industry leaders, as we know, barons of industry back in the day used to run factories and people would just die because nobody cared. You have to care that you have a group of people looking out there trying to save people's lives and make it easier for customers. And that's how we are. But I'm not a random trader in an organization, Alice. I run the largest trading marketplace on planet Earth and the largest futures community on planet Earth. I created a trading platform. I'm not just a trader. I am a business owner myself. So I'm an industry professional in the middle of the industry. And so were lots of my friends out there. And none of them were asked to be part of an SRO, which is very important to have a well-rounded organization. Even if it's not me, it needs to be other people. Listen, we've got somebody over here just angry because they're angry because they're wrong and you guys made them feel bad and now they're crying. It's okay. Leave them alone. Just leave them alone. Leave them alone, guys. Y'all be nice. Don't be mean. Sure, nobody's going to look out for you, Alice. Just trust Top Step's got your best interest in heart. A business designed to fail traders and make money. Let's just let them make an organization and make the rules for everybody. That sounds smart, and good luck to you. And okay, have your opinion. I disagree. So anyways, do you guys think it's smart to have a well-rounded organization? My thought was 70% should be industry leaders outside of prop and affiliates of prop firms, and the other 30% should be prop owners. I think that's fair, that the voting majority is held by people that don't have vested interest in being a shareholder of a prop firm. I think that's fair. I think that's very fair. Ones with no conflict of interest. And affiliates have the best of both worlds because the affiliate wants the prop firm to make money and the affiliate wants the trader to not be screwed over. Because if a prop firm's screwing you over, the affiliate makes less money. If the prop firm is going under, the affiliate makes less money. So the affiliate needs to keep both sides happy. It's the perfect answer to an SRO. Affiliates are neutral, but also profit incentivized. It's called a Nash equilibrium in mathematics. It's the best of all worlds that makes the most sense, but that's the way I think. So yeah, no, it's some idiots in here like, you don't like Top Step because they don't pay you. Like, you know, I sometimes I make 7 figures a month in life. I don't care about a fucking $10,000 check from Top Step to sway my opinion. My businesses make so much money, it's crazy. No, that's not my incentive to not like Top Step. Are you kidding? A rinky-dink affiliate check? No. I left Top Step as a firm. I didn't say I hated them. I don't support them because I don't support a monopolistic industry leader. I don't support that. I think their accounts are great though. As I always said, I trade Top Step myself. I haven't put a lot of attention to it, but I never said anything bad about the firm and their accounts. They're actually a really good firm. They're S tier. They're one of the top. I just don't have to support them. How many businesses do I have? I have 16 streams of income, and I'm about to open a pickleball court with iDoc and maybe a boba shop. We've been talking about it, so that would be 18. I make 7 figures a month sometimes by using a prop account. Not all months, some months. Yeah, well, I mean, obviously, you know, in futures, this is a business decision, right? You guys, whenever I used to trade my real account on stream, nobody cared. The prop firms get all the views. So you have to jump on the bandwagon, and that business growth strategy for me grew. Our stream is now up 2,700% since December of viewer base. So being the only person trading real accounts since 2016 on my stream, you know, we were kind of like doing this, and I took a break for 3 years, and then I'm trading real account again and real account again. And then as soon as I did prop firms, we're like this. So yeah, it is a business decision. The partners of Rocket Scooter got together and said, we need you on the prop firm bandwagon. And revenues in Rocket Scooter were up like 800% because I do prop firms. So money, money, money. But the thing is, I don't hide behind that. That's the truth. It's motive driven by profits. So you guys want to watch it. So yeah, you think the $3,000 paychecks from Tradeify every 5 or 10 days is just money that it's just like, it's not even money I care about. What gives you more income? The trade or the business? All of it together makes a lot of money. The businesses make a lot of money. Trading makes a lot of money. Prop affiliate makes a lot of money. Prop accounts make a lot of money. Some of our side investments make a lot of money. I mean, it's just like I do a little bit of everything. I'm an entrepreneur, so. But I've always been a trader first, and I was always trading a real account But nobody cares about that. You kind of detach yourself from the prop industry if you don't know anything about it. And everybody's a prop trader. So if I'm like trading willy-nilly and having strategies I use in a real trading account that don't apply to a prop account, people just don't care to watch and learn. So I decided to become the person that teaches traders how to beat prop firms instead. So, yeah. But at least I don't pretend I'm something I'm not, you know, and hide around that fact. Trading props is strictly a business decision to grow the YouTube stream. Oh, it was a great decision. We grew so fast. It's incredible how fast we've grown. And so yeah. But yeah, this mostly for show. Deciding I'm gonna make 150K in Tradeify and get a live account. It's not that I'm like, oh my god, mom, I'm finally a funded trader. You know what I'm gonna do with that live account? Brag about it on social media. It's for marketing. We've been streaming since about 2016, and then the channel rebranded to Rocket Scooter when we made the platform in 2022. It took like a 3-year break streaming. Like a 2 or 3 year break streaming on YouTube, and we were in Zoom for a while. How many courts at the pickleball? We're still like thinking about it, and we're trying to find a location. I mean, we're in talks of it right now, but we think that's the next thing we want to do. We love pickleball, and so do our friends, and we want to kind of open something. Dude, it's such a low overhead business. Oh my god, pickleball will be so. You hire like a teenager to sit there and make sure just nobody sets fire to the court, you know, nets and stuff, and you know, get a food truck to come out and serve food, and then, you know, maybe get a liquor license if you want to go that route. Yeah, dude, it's cash business, man. Super simple, super easy. So I don't know. We're still thinking about it. We've been kind of going to a bunch of them and looking at them and seeing what they're like. But we've grown so much that we don't have liberals in the stream. I need to be nice. If you had 7 figures, you wouldn't need to pay for a funded account. No, I have a real account. I have a real options account. I have real features accounts. I trade all of those as well. Sometimes you'll see me jump on my phone, and that's where I do my real trading on my real account. Since on the stream, I focus on the prop accounts. But yeah. Speaking of. Yeah, Ty's pretty good, man. I've seen Ty on Twitter. We recently became acquainted. Ty's good peeps, man. We got to collab sometime, bro. Like I'm really like opening up the stream to bring on other feeds on where we can actually have like other people's faces here. We can all chat together. But yeah, Ty's gotten some pretty good prop firm payouts. Are you and Brian always streaming together, or was that the first time you did it? I was watching you guys yesterday while y'all were talking about what kind of car Brian was gonna buy. That was really funny. What do I think about Danny's trades? Avoid. I didn't say anything mean. He seems like a nice kid, but avoid. Yeah. Avoid at all costs. I mean, he got caught photoshopping statements multiple times. I mean, that's all you need to know. I would be very careful following anybody that does that. Other than that, I've got nothing personal against the guy. I've talked with him before. He promised me he'd show me his real broker statement when that all that crap went down. So that basically, like, when him and Pat were yelling at each other online, there was this huge thing, and people were like, you know, he's going to show his broker statement. So Jadon called me and he's like, Matt, you know, we'll show you the broker statement because we know you're fair and in the middle. I was like, sure. And then Danny reached out. We talked, and then he said, you know, I'll send you my statements tomorrow. And then I never got them. So that's all I needed to know. Not Ty Lopez. No, not Ty Lopez. You know, a Lamborghini in my garage, but you know what's better than this Lamborghini? All this knowledge I have with this 10,000 books I have that I read every single day. I've actually talked to that guy on the phone, by the way, Ty Lopez. I went through a phase where we were basically shopping around through marketing firms and digital marketing firms, and actually spoke with his people, and I got him on the phone, and he's actually smarter than people think. He has good ideas, but a lot of them didn't pan out. But he's not the most brilliant person out there, but he's actually pretty smart. Ty Lopez. You know, in Best Buy and Radio Shack and all these companies, he bought all of the companies to have controlling interest in them, so he can have the name, so he can turn them into products online to keep the brand alive. And I thought that was a pretty good, a really smart idea. I don't think it panned out, but I think it was smart to think that you can create e-retail out of like the Best Buy, or saying Best Buy, Bed Bath and Beyond and Radio Shack and some big name companies, you know, still keep them alive online. That was smart. He bought all these bankrupt companies just to have their names. And they're powerful brands. I mean, I would buy towels from Bed Bath & Beyond online because I'd like, oh, just the brand. Trace and Matt's good. Matt and I are buddies. I like him a lot. Matt's good peeps. Right. So, I mean, right. Anybody that's a successful, professional, full-time trader that has millions of dollars in their pocket should not be touching a prop firm. The reason for that is the taxes are higher. There's no reason to do it. But if you're a business person whose business is influence and bringing in viewers and things like that, a prop firm is the popular thing to do. So that's why I do it, because it's popular. The money doesn't mean anything. The payouts don't mean anything. I mean, every time I look down, I'm like, oh, Tradeify sent me 15 grand. Okay. I'm not, the income is not like what I rely on. But if I didn't trade prop firms, we wouldn't get any growth on the channel. So it kind of was a business decision for us to kind of jump on the bandwagon. And then like I refused to for so many years. I was like, I don't want to be part of that. And you know, it's kind of for newer traders, but it's honestly like the bandwagon's fun because it's crazy how popular it was. And I feel silly for not getting in on it sooner, but I'm honest about that. Driven by money. Yeah, giveaway's over, man. But people ask that question, like, why would you be trading a prop firm? That's what somebody said. That's why I'm talking about it. If you have money or you have whatever. And there's nothing wrong with it. On the stream, it's also almost zero risk trading to me. I mean, if I blow up the account after 3 months of keeping the accounts alive, if I blow it up, what did I waste? $500? Not bad. But if I have 100,000 in an actual account and I blow it up, I lost 100,000. That kind of stings a little bit. With the prop firms, I mean, it's just like, you know, it's much easier on the risk side, especially when you're trading in front of people. It's a little harder. I think it's important, though, that prop firms are a very big part of the industry now. Great place to learn, great place to get trained in, a great place to take low risk yourself and have, you know, fixed risk in all of your own trading to learn. It's hard. When I actually got started out, I had to put like 10 grand into a futures account. And then if I blew it up, I lost it all. That kind of sucks. You know, like the harder thing to deal with would be like having to actually lose a lot of your capital just to day trade. Negative resilience, guys, and markets advancing. So it's probably going to pull back by the end of the day. I still wouldn't short it, but just be careful. But yeah, I think it's kind of silly to think that I'm driven by like my opinions by somebody's paycheck. I'm not that poor that I need to get a paycheck to love somebody. That's for sure. So that was a not correct statement. Because I still love Top Step. Don't think I'm against them. I just don't love what they're doing. I think this is the top for the day, guys. I think we're going to reject Yellow Line pretty hard today. It's hard to say. Resilience is negative in the S&P and the market's advancing higher. Again, I still don't short off of that, but it's very questionable unless stocks pick up some momentum. Do we actually keep going? Yeah, like Little Blue's right. And you know, like you'll think I'm in trouble when I start telling people to copy trade accounts. Exactly. Like as much as I want to push the short button, I can't. I don't have a rule for it, but I think that this is probably a local top for the day. Right, like if I wanted to make affiliate money, I'd be telling you guys to copy trade and we all blow up together and that'd be fun. I don't do that. You started watching a week ago, about to change your life. Hopefully, man. I like hearing people change their life. All right, so watch this. We'll just watch this today. Resilience kind of taking a second nosedive. It's not bad, but it's not as good to support an advancing market. So just be careful. Bum, 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 bum. Missed the giveaway, dude. It's at 11 o'clock every day. You missed it. Ooh, I get a business loan calling. Let's see what it is. Hello? Hello? Hi. I'm doing fantastic. How are you doing?
I'm doing good, thanks for asking.
Cool.
The reason for this call is to inform you that we have actually been reported that you were involved in car accident in the last 2 years, and the compensation amount for being innocent at the time of accident hasn't been delivered yet.
No,
Is
no
this
way this
correct?
is a scam. No, that's not correct.
Try to remember, I am talking an accident in the last 2 years, or maybe you were the passenger in the car, or
You
one
gotta
of your
trust
family
it.
members.
Is that
had an
Alice calling me?
accident.
Y'all be nice. Oh, no, that's not me. I haven't been in an accident in like... Jesus Christ. Y'all be nice. Be nice. Be nice. Let people can have opinions. That's what I love about this world. Even Alice thought what I was saying was narcissistic. Let them be. Let them have their opinion. It's okay. Life is okay. We'll be nice to this person. Was that person's name Alice that called? Coincidentally speaking. You let your son answer scam calls? Oh, that's funny. I actually didn't hung up. They hung up on me. I didn't even hang up. They hung up on me. So sad. What I think about take profit traders, take profit's really good. I haven't personally used them yet, but they are the fan favorite here. That's everybody's favorite as far as if I were to poll everyone's use. Take profit has unrealized intraday only on their funded side. So it's end of the day drawdown in the testing side, the challenge account. Yeah, no problem, man. I'm glad to help. Ooh, 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 ooh. Did it let you build a buffer on the drawdown? I think at some point it no longer trails, and I don't know what the buffer is, but somebody here can tell you. Ty, what's the buffer on TPT account? How much do you need to make your profit target? Let's make your, I think it's profit target maybe for most firms. A lot of people immediately turn away from your channel once they see you pushing the prop firms. Evan, no. The opposite's true. Once we started becoming prop firm affiliates, the channel has grown almost 3,000%. Strictly from that one choice. The marketing capacity of what you can do being affiliated with a prop firm is insane. The endorsements that you get, the visibility that you get, it's insane. No, and not only is it a terrible idea not to do it. I used to think that though, buddy. I was in the same boat as you. I was like, I don't want to be tied up to be like an affiliate salesman. That sounds goofy. I'm going to lose my core audience. My core audience was a bunch of you guys have been here forever. A bunch of trading math geeks like me. We were like a nerd club off to the side. there wasn't any mass appeal to that, but being affiliated with prop firms is mass appeal, dude. There's so many people that come to the stream now. I can't even tell you. Best decision of my life is to rep prop companies as far as my brand goes. Maybe 1 or 2 people maybe turned away for every 50 people that come. So in a business decision, you guys, I'm going to tell you, again, if you're running a trading business, you want to be affiliated with prop firms. That's kind of where the audiences are. Because there's probably 1,000 prop traders for every 1 real futures trader on the planet right now. So just keep that in mind. Yeah, I know there are some people that look down on prop firms, but even so, to them, I'm still trading on stream, so it doesn't really make much of a difference. They may not like seeing the prop firm ads, but in reality, there's nobody out there that's purely just futures trading really anymore. That's just big, and I was the last to do it. I was the last guy to join the bandwagon, trust me. But I realized that I have a trading platform and I have a big trading organization. The last thing I want to do is be irrelevant and not connecting with my audience in the space. It's just kind of like, you don't want your music as a band to be so experimental. Sure, you'll have your diehard fans with your experimental sound, but you won't really reach mass appeal if your goal is to be commercialized. And clearly our goal is to be commercialized, right? We have a trading platform. It'd be cool if I made a trading platform for my 100 best friends and I carried a massive overhead, you know, paying 50 grand or whatever a month to carry this platform for you guys. But unfortunately, you know, to pay the bills and to hire more people to grow the company, you got to have that mass appeal, unfortunately. So you're 100% right, Evan, though. I had that decision with my partners for years. Like, maybe we should do it, maybe we shouldn't do it. And I was always the one that was like, it's just going to make us sound so hokey. People are going to hate it. And as much as I thought people were going to hate it, nobody actually hated it. It was actually very well received by most people. And maybe just the people that hated it silently went away, but the party's so big now you don't even notice. But trust me, I used to think the same way, like prop firms. I was like, I don't know. But once I finally got into them, I realized they are the best educational tool out there. And it supports my desire to train and teach people as well. Because I can't just tell people, hey, go be a trader, put $10,000 in a brokerage account, good luck. Right? I don't think that that's going to be helpful to anybody. And so for me, it's like, yeah, you want to learn trading, here, go buy an account for 50 bucks. And if you blow up, that's only 50 bucks. I feel like that's more ethical as a trading educator to really lead people down a softer path rather than do what I did, get in a brokerage account and good luck, bro. You know what I'm saying? So my thought is really, I 100% agree with you. I mean, I used to be on the same boat. Now it's kind of like people are coming to me, Matt, can you teach me trading? What can I do? And I say, well, a prop firm is the less, like, you know, you're not gonna get your ass kicked so hard from a prop firm. It'll be kind of like one of the easier ways to make a little bit of money. That makes sense, I guess. Sorry, easier ways to not lose money. Sorry, not make money, but to not lose money. And that's, I think in an educational sense, it's better for traders to be educated in a space that's less risky for them. Because paper trading is a complete waste of time. There's that negative resilience starting to play out, some resistance here at the start. But that's how I felt. And so when we thought about it, the goal was, well, when you put it all together, relevancy in the space, you need to be involved. And when I got into it and started trading some of the firms, I was like, man, this is a great educational tool. Wait, I'm only paying 200 bucks for this account and I could struggle with it for 2 weeks before I blow it up. And then I blow it up. I've learned a valuable lesson. I'm taking it seriously because I paid 200 bucks for it. So the perception of value is there. I'm going to take it seriously. Paid some money for it. Paper trading, I'm just kind of like goofing off and not paying attention. Wow, there's tremendous value here because when you pay for an account, there's some risk on the table. Wait, and you get paid out if you win? There's some reward? Real risk, real reward? I'm going to take it seriously. And then my risk is limited to what I paid. Like I can't lose all my money and then some. And I was telling myself, what an amazing way for a new trader to practice for a fee. You're basically renting emotions. And that's the way you really think about it. Because in paper trading, there's no emotions, but in prop firm, you're paying a monthly fee to put emotions into the game. So you're renting emotions from the prop firm so that you actually get like a really good experience in the market. And it really does prepare you for real trading because even though there's crazy rules that you would not otherwise have, the prop firms are trying to squeeze you out. Like Frank Sinatra said, if you can make it there, you'll make it anywhere. Because this shit is 10 times harder, which is the last reason I do it, is bragging rights. Trust me when I say I'd love to be on all these leaderboards, and my real, edge clear and amp accounts don't necessarily have leaderboards I can brag about. But if I'm Tradeify's top trader, they blast my name to hundreds of thousands of people. And to me, the leaderboard was my main motivation to jump in on this. It's marketing gold mine. If you're a good trader, you would be attracted to a leaderboard. 100%. So next entry, waiting, right? Negative resilience, as I told you guys, be very careful. This is all, remember, resilience is an honest view of the market. It is a leading indicator. Right at noon, before we rallied up, resilience was negative. So we rallied up with negative res. The market is not as stable on the long side momentum from here. So resilience in this particular case gave you a 10-minute head start to this decline. We never, remember, a rule here is we never use negative resilience to short. We just avoid the long. I still bet that the stocks can pick up momentum at any point in time. But because the resilience is negative, and it went negative right here, and we walked right up to a resistance, did anybody close out their long who was long right there because resilience went negative? Anybody? Did y'all do that? But we also don't short because I don't like, that's not a reason to short, right? So where can it go? Any of these pivots are really good, strong pivots today. Here, here, and here. If res is negative, then we expect the market to at least interact with this or lower. So to be down inside of here. The next strong pivot is 250 on NASDAQ. Half gap or lower, yeah. You bumped your long to break even? Yeah, so be careful. The best my funded futures. Let's go through that. But in all honesty, my goals in the space have always been to educate. I love it. I love teaching. My boot camp, which is like my pride and joy. I think my boot camp is better than Rocket Scooter. Things I'm proud of, at least. And I only charge $20 for the whole month. So like I even do that not to make a lot of money. It's strictly a passion project for me, and I love doing it. I love it. Let me go to my funded futures and let me go to their main page. Oh, it's got me logged in. Hold on, let me log out. The resilience indicator is a creation of Rocket Scooter. So it's inside of our platform, and you have to sub to the platform to get it. Somebody, and maybe one of the mods can drop the link really quick while I go through my funded futures, and let's look for some challenge accounts. It's trying to make me log in, but I'm trying to look at it without logging in. Okay, let's compare. They have a bunch of different examples of ones you can do. Now, let me do this in a spreadsheet so I can give you a little bit more detail. All right, so in general, you've got 4 different kinds, right? You have a starter plus, expert, starter, eval to live. Oops. Let's compare. So honest exploration together. Starter has a daily loss limit, end of the day drawdown. So their starter plus is end of the day drawdown. Okay. Let's just do more really quick. Okay, the difference between starter plus and expert is that expert gives you a little bit more profit target, and that they have no scaling rule, no consistency rule. Aha. Expert, wait, no consistency rule either on starter plus. So the reason is, eval consistency rule. Okay. So starter plus is end of the day with consistency eval. Funded consists. Okay. So already out the door, the major difference between these two is this consistency, the eval consistency rule on the eval side. An expert doesn't have it. So eval consistency, expert is no consistency. And yes, so starter is your is so basically you can buy your way out of that rule for a little bit more. I would buy my way out of that rule. If I can get rid of eval consistency, then I can pass evals much faster. So more expensive price to pass them much faster. Totally worth the dollar amount. And then all these other rules don't really add additional value, I think, on the price. Let's see if the actual drawdown is the same. Okay, so let's do price per drawdown on each of these. And let's do 4,000 divided by, or sorry, 2,000 divided by 227. Let's do these are the 50, the 100K, and the 150K. So this is equal to 2,000. You guys want to do this every time you're going to buy an account. 227. That's 8. So 8's rather low. We like accounts that are at least closer to 10. Let's see what this one is. 334 divided by 3,000. Oops. I'm sorry. Equals 3,000 divided by 334. That's 8.9. That's slightly better. But then paying for, and that's on expert side, by the way. But you're also paying to get rid of the consistency rule, which is good. That's worth the extra cost. And this one is equal to 4,500 divided by 477. So this is 9.5. So on the expert side, the value here is tremendous. It scales so well here. That's a 9.5. Anything close to 10 is what we like. So this is the one that's good on the expert side. Starter plus, are the numbers the same? Hold on. Oh, they're different. Okay, so starter plus is going to be Probably 127. That's a 15. Holy crap. But that's actually good for an eval. What? That's pretty good. I didn't know it was that good. I actually haven't looked at this as much as I should have. And it's end of the day drawdown. This might be one of the best end of the day drawdown with an eval rule that I've seen. 15 is incredible. Wow. Okay. This is 4,500 divided by 377. This is 3,000 divided by 267. Okay. All right. So let me just, hold on, give me a second here. Wow, that's really good value. So I need to analyze the other rules, which I'll do next. Ty's let me know some of the rules are kind of, let's look at it. So we'll analyze the rules later. Yeah, 15, there's got to be something that robs you somewhere. For it to be that high of a value, there's something. So Ty is saying payout caps too on Starter Plus. That's also big. Okay. We'll go through the other rules. So Starter Plus is a tier payout system. Okay. So that's why it's like that then. The high ratio, they got to get you somewhere. Okay. So I'm just analyzing the cost and the consistency. The difference between Starter and Expert. What's Starter and Starter Plus? Weekly payouts possible. So Starter Plus. Let me make this bigger. You can watch it all of it. So Starter is less expensive. And it looks like Starter has consistency rule and funded. It's the other way around. So Starter has no eval, but consistency and funded. I can't remember all this. I'm going to write this down. Starter itself. And we'll talk about the regular rules in a little bit. Okay, end of the day. Again, I love end of the day. Starter is eval consistency, none. Funded consistency, yes. Okay. Expert is none and none. Okay. And then funded consistency on Starter Plus is none. So already out the door, Expert is the way to go with these rules because no consistency at a 9.5. The Expert 150, with all things being equal, without looking in the other rules, is the better value of all the ones we looked at so far. It has a 9.5 cost to drawdown ratio, which anything close to 10 is what you want. And you have no consistency rule and no consistency rule. It's highly competitive and slightly better than Tradeify Growth, which has a consistency rule of 35%. So this, by far, is up there at S tier end of the day growth account. Probably one of the best in the game I've seen. I haven't looked at all the other rules, but Oh, Tyler's saying the same thing. Those are the best in the game. Okay, cool. That's just looking at it right now. Your value is tremendous, and this is the one that gives you value. Remember, the ratio here is 8.8, 8.9, and a whopping 9.5. So this is the best bang for your buck. Slightly more expensive, and I think we get like 5% off at Rocket Scooter to make it a little bit cheaper. But no consistency rule is what you're buying, which means you can get the profit target as quick as possible. Now let's talk about how the payouts work. Now I don't know what this eval alive is. But I guess they're piloting the live system too. Oh, wow. That's kind of cool. I am liking what I'm seeing. Okay. So the eval alive is also end of the day drawdown. These guys know it, man. End of the day is my favorite. That's all I ever fuck with. Good deal. Eval consistency. Oh, yes. And yes. Okay. So I don't know what so the starter in general, this looks to be very similar to take profit. I'm going to tell you right here. This is a TPT equivalent. So this is your no consistency rule on your eval side. Consistency rule once you're funded, but it's end of the day drawdown. It's the end of the day version of TPT. Wish they didn't have a 25K payout cap. So overall, they have 25K payout cap in general. They pay in 2 minutes, the fastest payout. I've heard that funded futures is the fastest payout. That's what I've heard. It's on experts across all the accounts. Okay, so all the accounts is 20. You can make 25K max and you're done. So basically, get in, make your 25K and you're done on experts. Okay. So 25K total, and then you go live. Oh man, why am I not doing this? Okay, by far, of all I've seen right here, the 150K expert My Funded Future is SS tier. This is by far the best end of the day drawdown in the business, but also there's a cap on the payout. So that's the difference. The other side of the coin, funded next, is no cap on payouts. So those are my two go-tos for end of the day now. This is by far the best one I've ever seen. I've seen a lot of them. So this is a capped payout version. Funded next is an uncapped payout. And that rule might not, funded next right here, may not be uncapped for long. But as long as it's uncapped, this is my choice right here for end of the day. But as a second place, tremendous value here. No consistency rule. That's a banger. On end of the day drawdown. Alpha is probably better when I look at the numbers. Like I said, when it comes to prop firms, for me, I have to make sure that I trade with somebody that I know and that is kind of like bigger and been around. So I don't know anything about Alpha. Can you teach me about them? Looks like eval to live is so starter. Let's just avoid starter. TPT is better. So for the starter account, you want to go for the TPT. That's slightly better version than starter. Eval to live. It looks like, I guess, once you pass your eval, you go to live. I need to research this, but this is going to be, they have a 50K. Wait, what's the difference between 50K and 50K? Profit target. I don't know this program, but this looks to be something I want to look at. Profit target 1, profit target 2. Somebody needs to teach me about this one. Wow, I didn't know my funded had such good value. I knew it was good, but now I know why. Dang, you guys. I'm very excited. Bam, 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 bam. So yeah, so I would say I would avoid the starter. I would do expert. Expert 150K is the best, and then 100K is the second best. Those two are And actually the 50K is not bad either. It's a high 8. It's not the best, but it's still very competitive in that order. The expert 150K is the value. And 100K if you want to save a little bit of money. I would avoid the starter plus. I'd avoid the starter with what you guys like to do if you know me. I would say that the real value with my funded, that sets, I like to look for like, how does this firm set itself apart from everyone else? Is I would say that their expert is by far one of the best I've seen in the business as far as stats go and what you get. No consistency rule is huge, especially while funded, by far. That's, and I was like, how would you stay in business with that? But then, you know, they move you to live very quickly and I go, that's it. So that's perfect. By funded's never going to blow up and go insolvent. Those are fantastic rules. You pass it in one trade. Yeah, it's great. Very impressive, MFF. Very impressive. All right, here's that yellow line rejection. One more time, resilience is still negative. And remember, resilience being negative doesn't have me short the market. I just basically stopped trying too long. The pressure is not there for continual long movement. Even though we did pop through on a short squeeze, it's looking a little kind of meh on the side. And it's probably going to come down from here. Resilience doesn't lie. Resilience is showing you a weakening of the stocks. So it's likely that was a final little squeeze before we pull back. That was good avoiding this, right? What's the best on the fund next? The 50K. So I did the same evaluation, the one in the middle, 50K. And you can get 6 of those total. You can get 3 100Ks or 6 50Ks or 12 25Ks. So 6 50Ks is what I'm doing for the best bang for the buck. My funded futures compared to Tradeify straight to funded, you can't compare the two. Straight to funded is a whole ball game of its own. And Tradeify is like the gold standard of straight to funded. I would call the MFF 150K expert the gold standard of end of the day accounts with cap payouts. And I would call funded next the gold standard of uncapped payouts. So by far, both of those have tremendous value. These guys have a 40% consistency rule. That's the major difference. So it's a little harder, but it's going to come in a little cheaper. And there's that rejection I was talking about earlier. Resilience doesn't lie, baby. Ooh, 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 ooh. How's today been? Very good, very good. I go up like 6 or 7K, something like that. Most people aren't getting close to 25K in payouts. Yeah, that's very true. So for what you guys are doing, yeah, the payout cap is not something to be worried about. Especially if you're struggling to get your first payout, then that's not going to be a factor. So MFF is a fantastic choice. I like exploring these things live on stream with you guys to get my real honest reaction to it, because I know all the numbers. I keep a spreadsheet with all of it in it, and I don't know what the eval on the live is, but that sounds pretty cool. What's my target for a long? Nope. No. Negative resilience. I'm waiting for a better pivot to take a long from. So how did we do, guys? Remember, resilience is never wrong. I love resilience. Market just rallied and squeezed and squeezed and squeezed and squeezed. The stocks gave us no momentum, and then we pulled it right back down. How'd I do? How'd I do? I'm not shorting this, but I'm absolutely in no longs, right? But now we wait. We wait for a better pivot. Negative resilience can be as far down as here today. Right? What about funded family? I honestly was thinking about looking into them back in the day, and all that fiasco happened with Danny. And I felt really bad because I always liked Jay Dunn and I was always buddies with him. And they seemed like they were doing everything great. And but then when that stuff happened with Danny, it just kind of became like a sore talking point in the space to give them a shot. So I said I would wait until it all cools down and then take one more look at it. I need a firm to be around for a while and have trustworthy leadership. And I still see Danny talking about it and being part of it. So as long as that's happening, I'm not going to be part of it. So, but not anything against the prop firm, because I don't know anything about the prop firm. So don't take that as like an opinion on the firm. I know nothing about them. But Danny kind of betrayed our trust. So his involvement with the firm would be the same thing as Top One. You know, they're partying with dummies and idiots, and like, I don't want to be part of that. And I really value my choice in looking at something based on the choices they make. And I need to see, like, you know, I need to let other people be the guinea pig with Funded Family. Not going to be me. So nothing personal against them. They probably have good rules. I've actually never looked at it. So, but I need to see other people. I'm in the boat where it's soured with me. So I need to see other people using it, and then people I trust telling me to trust it. Then I'm going to take the leap. I have no desire to take a new leap anymore. I almost did with Top One, and thank God I didn't. So I had to be careful. Now I'm getting phone calls and emails like every other day of like, hey, would you like to work with our prop firm? We'd love to offer you this and offer you that. And I'm like, dude, I get so many a day. It's crazy. And I'm like, okay, now I got to be careful. I'm going to stick with the bigs, and I'm not going to be guinea pigging anything else. And if I do, guinea pig something that's, I'm the new person in the space, I'm gonna be very clear about it. I'm guinea pigging Funded Next. While they're uncapped payouts, we'll see how well it goes. Could they rug pull? They're a big Forex firm, been around for a while, so I don't think they're gonna rug pull or go under. Can they change their rules on me? I don't know. But hey, I'm taking that risk now. It sounds good to me. So we'll see. And so I take it objectively, but I don't think they'll have anything bad. Top One is good. Nothing against the firm. They seem to be good. I just don't agree with management choices and the way they conduct business. So just like with Top Step, it's like, I don't like the way they conduct business, so I don't really promote them. And so the rule changes and making people get refunds if they don't like it, that just is like kind of a sour. That's something I don't agree with. I think that you should change the rules to all new folks signing up and not retroactively change rules because you had a bad risk model. Here's the thing. They were like, let's be transparent. We paid out 75% of our income to traders. Well, it's because you baited them in with easy rules. The goal was to bring people in and then change the rules. You planned that the entire time. It's a scheme, and I think that that's kind of schemy, and that they're going to take a lot of losses from giving people refunds. People are going to leave that, but they're going to keep a lot of people after the fact. And I don't think that's an appropriate way to build your business. So, but again, nothing personal. Their straight to funded account seems pretty good. But the problem that you risk is while you put a lot of work into the account and they change the rules and you have to suffer whatever the rule change is, or else, hey, we'll just give you a refund if you don't like it. And then you're like, well, I put in a month of work. That kind of sucks. And nobody wants to be in that boat. And for me, as a shark, you know, for that reason, I'm out. If you change your rules on the fly to affect previous customers, that's kind of a red flag to me as to it can happen again and again and again. So I personally would say nothing personal against the account or the style. It seems to be good. They seem to pay out. They seem to have transparency. I don't dislike any of that, but they're not on my promotion rotation anymore. I actually asked them to remove my affiliate code over that ordeal. I said, I'm not going to work with you guys anymore. And because it's to me, everything is about trust. And if a company does that, any company does that, I would have a really strong conviction to sever ties with them. But it doesn't mean I think they're a bad prop firm for you to use. They're just a bad prop firm for me to lead people to as a leader. So I can't, even though I could be making a fortune with affiliate sales, I would choose not to, because I wouldn't want to send people there. And people are like, well, Matt, you told me these guys were great, and they're changing the rules on me. So it's like my brand is at stake. So, but other than that, Mello, I've never heard anything bad about the payout system and all these other things. The thing I don't like is on the business side for me. So you do run a little bit of risk of your rules being changed, but they do offer refunds if they have to change the rules. So that's at least a good thing they're doing, but you don't want the rules to change retroactively. You don't want to waste your time and get somewhere and then they change it on you. Squeeze heads up. Stocks are deteriorating a little further. I'd be very careful doing anything from here. But as I said, yellow line's usually the end of the trade, and we're seeing a little bit of volatility picking up. Let's take a look at the VIX while we're chilling here. Ooh, baby. VIX is in a liquidity pocket on bull. Ooh, VIX is actually building. Okay, so volatility is going to pick up in a little bit. Yeah, I wouldn't be trying to long from here, guys. I'm not telling you what to do, but I wouldn't be personally. I want to be touching this. Okay. So who's in the boot camp and it's your first time here? What do you guys think honestly about the boot camp? Yesterday was class number 3 or 2. Yesterday was class number 2. What do you guys think? Honestly. Any feedback, any notes? Where's the boot camp? Okay, so let me show it to you really quick. Our boot camp is here. If you go to Rocket Place, find my store page on the Rocket Place. You go to here. It's $20 for the whole month, $20 for 20 days. Oops, sorry. That's a link. But the videos are recorded, so even if you can't make it at market close, you can still watch the video itself. The videos, the boot camp, we watch the video together and then I answer questions. You can watch the video and then ask me questions at your leisure. So, but my ad brings trouble focusing that long. I had to go back and rewatch. I know it sucks, dude. Oh, you're ADD, bro. Like I'm the same way as you, Squish. I have severe ADHD myself, but like I can't like when it comes to trading though, that's the one place I do focus. So I'm so obsessed with like market mechanics that it's the one place that like I finally do focus. Stu has a link. Yeah. You can go there. Oh yeah, daily profiler. Thanks for reminding me, dude. I told you I would do that today. So let me go over it. Okay. So we have this sheet and this is how you do position sizing. This is one of the classes from the boot camp and I'll go over it for you today. And this is a freebie for those of you that are in the boot camp. Our boot camp is $1 a day for 20 days. So if you wanted to learn day trading and learn risk management, position sizing, all the stuff that I do especially, spend the $20 and it'll probably want to be the best things that you learned in trading. Okay. So this is one thing we did give away in that boot camp is a trick on position sizing. Okay. I built this spreadsheet. I've shared it with you guys. Rules of thumb when it comes to prop firms. You want the best chance of success. You're weighing out 2 possible things for yourself. You're weighing out how much you're going to pay per month for all these prop firms versus how much you're going to blow up. So your total cost is how much you're paying per month versus the probability if you get something out of it. The best rule of thumb is to do 2 conditions. You have 2 different types of breaches, a hard breach and a soft breach. Normally, a hard breach is like total loss limit. A soft breach is daily loss limit, where you get another chance the next day. So give yourself 3 days to hit a hard breach in the eval stage of any account. 3 days. If it's a $6,000 hard breach drawdown as an example, then let yourself lose 3 days, which is 2,000s a day. A soft breach is a daily loss limit. Allow yourself to have 2 trades per day or 2 losses per soft breach. You maybe make a trade, it doesn't work out. Give yourself room to take the second trade in case it lines up again. So what you do is you line up these 2 conditions. In this example, I loaded up some rules. This is my Tradeify straight to funded rule. 9,000 profit target, 3,750 daily loss limit, $6,000 hard breach, 10 days to trade, 20% consistency. I plugged everything in. I chose 40 points stop loss for NASDAQ. I can type in 10 points for ES if I wanted to. Let's do this on a NASDAQ basis. My question is, how many contracts should I trade for each account? And then here we go. I type in these 2 numbers right here. Let me just make these let me put a box around them so you know you enter in those numbers. Got like a more neon or Have a better looking green here. Just like a less dark gray. Okay. All right. So you type in these boxes here, and then it tells you the following. Your win conditions, right? So basically, the minimum trade target per day is your profit target divided by your total days. If you need to make 9,000 in 10 days, you need to make at least 900 per day to get your payout as quick as possible. If you have a consistency rule, 20% example for Tradeify, then the maximum trade per day has to be no more than 1,800. So my target, I want to be in between those two numbers. So now I'm targeting 900 to 1,800 per trade to get my payout as fast as possible. Then on the loss limit side, what you do is for the two conditions at the top, give yourself 3 days to hit a hard breach. So I take my hard breach divided by 3, it gives me 2,000 target loss per day. I take my soft breach and divide by 2 and gives me 1,875 per day. You want a loss that is less than the smaller of these two numbers above. So if I'm aiming for a 1-to-1 trade to satisfy all those conditions, then my max target loss on 1-to-1 is 1,800, which is this number on a 1-to-1. Then I lose 1,800 if I win, make 1,800 if I win, 1,800 if I lost. 1,800 is less than both of the losing conditions, so that works. 900 on a 1-to-1 trade also meets all conditions as well, my minimum loss target. So therefore, my normal position on achieving all of those things with a 40-point stop loss is roughly somewhere between 1 mini and 2.25 minis. So basically what you do is you just plug in the two numbers here, and then you plug in all your prop firm stuff here, and then the calculator will tell you your position size to meet your best consistency. This is how I've been doing this, and it is by far like a banger. Like honestly. So and so because of that, example, my Tradeify straight to funded, remember we teach you in the classes, normal is the biggest trade you're going to do. And then medium is going to be half of a normal. A small is 1/4 of normal for we teach you a small is 1/10 of the account size or position size in a real account. Small is 1/4 of your normal size. So an example in the liquidity map on the top of the screen, you see how it tells me N and S and all these other liquidity map things are going to tell me like S0, M, N. These are the sizes I take on each one of these setups. And so this is just the guide. You plug in your conditions. It'll tell you what your normal, medium, small, and sit out are. So with NASDAQ, I'm usually trading 2 contracts at most, 1 in the middle, and then 5 micros on a small, and then I sit out otherwise. With S&P, it's slightly bigger, 4, 2, 1, and 0. And that's how I do it. So with this one being said, I can choose a target, choose an N between these two numbers. So round up. So in between 2.25 and 1, I choose an N that's 2. And then this is equal to half of that, 1/4 of that, etc. And almost all of your prop firms that you're going to do, you will almost never size above these targets. This is almost, this model fits in almost every prop firm setup. They're all practically the same. You're not going to trade any more than 4 ES and not going to trade any more than 2 NASDAQ to hit your targets and maintain consistency. If you go any bigger than that, you risk breaking consistency. You go any bigger than that, you risk blowing up in a single day and not giving yourself second trades, things like that. So does that help you out daily? So that basically is just the calculator that shows you. You want to give yourself 3 days to fail because hopefully you have greater than 50% win rate as you get better at this. You don't want to lose like 3 days in a row, or you want to give yourself 3 days in a row to lose. So at least your win rate can carry you, right? You'll hopefully win 1 out of those 3 days, the 50% win rate. But if you allow yourself to blow up on the first day, just the coin flips alone of you bust the account every day, you're going to pay a lot more per month. You need to give yourself a slower path that meets all those conditions. So with the trader funding program, you can't go too fast, you can't go too slow, and you can't risk too big. And that's the perfect balance mathematically to trade these funding programs. Just for funsies, Aaron? Let's go. Nice. Do I trade differently with funded and position sizing? So evals or props in general? My bad. So that's for props in general. There's a whole different model. And let's say this is for prop. For a real account, I use different rules. What features account? Maybe I'll just write that in here as well. In a real futures account, you define what your normal is. And actually, I'll make a calculator for that later. We'll type in current risk interval. And with the S&P, I think it's like, let's just say, or NASDAQ in general. Let's do a NASDAQ basis. You go to Rocket Scooter, NQ, and we'll type in 221.5. Okay. Okay. So for NQ, current risk interval is you ask yourself this. How much, and let me make a little space here. This is by far, I'm going to tell you, you follow these guidelines here, you're going to have the best mathematical chance of getting funded and passing your funded accounts. This is the perfect amount to trade. It's a balance of not spending too much. And if you're spending too much, then choose your in at the low end. If you're okay with spending more, choose your in at the high end. And then normal, medium, it has to do with how confident you are in the trade. Okay, so this is prop position sizes. And this is real futures account. Okay. So in a real futures account, you have to ask yourself one more question. Let's put in a number. Max, you're willing to lose per day. Max, you can lose a day. Such that after 5 straight losses, you don't feel sick to your stomach. That's the rule. That's literally the rule. If you feel things, you're betting too big. If you feel anything, you're betting too big. That's really the rule. So max loss per day. If I were to say, man, I only want to lose like, if I lost $200 a day for 5 days and it's $1,000, I'll be fine. Okay, then that's a fine normal. But if I'm like, I have 50,000 in an account and I lose 5,000 a day, ooh, after 5 days, I've lost like half of it. Oh, I feel a little weird. Okay, that's too much. So you're going to pick whatever feels good to you. And this is all based on you. Real futures account position size depends on your money situation. So our boot camp is like this if you guys want to really learn. It's the math of how to do stuff. Like literally teaching you the right position sizes to use. Crushing trader funding programs. That's what you'll get out of it. This class was only $1 to take, by the way. Okay, so 1,000. So what you're going to do is the risk interval. So this is going to be basically equal to your position size for risk interval. So you're going to basically take, if a risk interval move happens, you do in news basis, all right, and in non-news basis. So you're going to trade differently around, news or risk interval for different modes of risk. A risk interval is you're going to lose this many points on a news event times $20 per point per contract. Okay, that's $4,000 per contract. So now you need to take the amount that you're willing to lose. Oops. Equals G36 divided by this. That's the amount of contracts you're going to want to do, which is micros at this point. To lose $1,000 a day, if news were to happen, one E-mini would drop your risk interval and you'd be down $4,000. That's way too big. So on a news basis, it's that. On a non-news basis, is equal to the same thing as before. It's your stop loss. So it's that divided by your stop loss divided by 20. And that'll give you roughly that number as well. So you tell it how much you're willing to lose, and it'll tell you your position size. needs to be in between the two. And for this rule, you're going to choose in based on is market volatile or not volatile? Is volatile or possible big news? Use news basis, like trade much smaller around news in or in normal non-volatile non-news bull markets, use non-news basis. That's it. So in your position sizing, you're going to choose, if I'm trading but Trump can tweet every moment in time and I only lose $2,000 a day, I better be trading 5 micros. Because the news event can drop you 225 points in a heartbeat, you know, past your 2,000 altogether. You never want to be in a space where you're going to lose more money, where you're fucking throwing up on Friday. You're an asshole to everyone in your family because you're in such a bad mood. That means you're trading too much. So in your volatile conditions, as you see right here, your volatile condition is here. It's a fifth. You said cut it in half. I cut it in a fifth, Yabba. Your volatile condition is about a fifth of your non-volatile condition. So basically, you're going to choose one of the two. So let me move this out here. So in choose from which environment one of the two above. So now I'm going to choose something. Oops. And that's how you do this. And this, I followed these guidelines for years. This is the best. Literally so good. Now you're going to type something in. Let's choose 2.5 here. And then this is going to do the calculation for you. And this is it. So our boot camp is like this. It's betting strategies and the right way to bet. So on a non-news basis, I'm going to lose $2,000 a day and I'm trading NASDAQ. Then boom, I'm going to trade about 2 to 2.5 contracts in my real account. This is going to be equal to that divided by 2. This is equal to that divided by 10. And a sit out is a sit out. And what I'm normally going to do is whenever I am looking at like my rocket scooter tools and stuff, it has a position size guidelines on there. Whatever I want to do, where is that news at? Anything is on here will have these kind of rules. So if you look right, liquidity maps has ins and m's all over the place. Each one of these setups, I trade differently and I'll follow my guideline, 2 contracts, 4 contracts, whatever. Your DD bands has an in, has a sit out, has an S for small, S for small. And I follow these rules religiously, like 100%. How would you trade a real account with 30K? Well, so James, the question is, how much are you willing to lose to where you feel uncomfortable? The answer with position sizing is a person-to-person answer. How would you, so James, with 30K, how would you feel after 5 days of losing 1, 2, 3, 4, 5 days in a row if you had 15K left? Is that a little too thick for like what you're willing to lose? It's kind of like you have to choose what fits your personality or your attachment to money. Like me, yeah, if that's too much, then what isn't too much? Just me talking out loud. Where's the spreadsheet? So the spreadsheet is in the 20 days bootcamp class in that Discord itself. Yeah, that's a lot, right? That would be a whole lot to, I mean, even for me, that would be, I'd hate to lose half of my account, you know? So then you say, what is not too much? Maybe $500 a day? So that if you actually lost 5 days in a row in a horrible winning streak, you were only down 2,500 of the 30. That's only 16%. That's not as bad, right? So 400 a day would be tolerable. So in James's question, great question. So for James, $400 a day. Are you going to be trading NASDAQ or S&P? MNQ? Okay, so we'll be trading NASDAQ at that point. So this particular case, on a non-news basis, you're trading like essentially 1 micro. I mean, on a news basis, 1 micro. On a non-news basis, you're trading 5 micros. So your maximum would be 0.5 or 5 micros, according to this sheet. Maybe 2 micros on your medium and maybe 1 micro on your small. So to be in the range of $400 a day On a non-news basis, which is a 40-point stop loss on NASDAQ, on a risk interval basis, you will lose about 5 times that amount in case a random Donald Trump news event comes and gets you. So does that sound close to what you're doing, James? These are just my rules of thumb. And you guys don't have to follow it, but this is exactly how I trade. So are you roughly in the ballpark of 5 micros on your biggest trade? And maybe 2 to 3 micros when you're maybe sure, and then like 1 micro if you're like, okay, this is risky. That's how you trade props? Dude, perfect. Perfect. Can you still join the bootcamp, Dean? Absolutely, man. Absolutely. So course number 2 is this, but basically you guys can rewatch this video now for this is what course number 2 was, is the appropriate position sizing to take. But yeah, really thank you guys for supporting the bootcamp and like everything we built. It is by far, you know, you got it, Verban? Okay, cool, dude. It's, you know, it's $20 for 20 days. Every day is so detailed and all the cool stuff we go over. But you can have access to the spreadsheet as soon as you sign up. And honestly, this is the bee's knees, and you don't really have to modify much. Most of your prop firms, this little rule set works very well for almost all of them. They're all very close to being each other. Some of them may have a smaller drawdown, and then this will just ratio down a little lower, and you'll be trading micros. But yeah. Bankroll says, if you're learning to trade, you better be making more than the fucking job. That's what I'm saying, bro. That's right. Since you got minis from your Tradeify, you've been having a better time managing risk. Better. So you have 25K TPT Pro account. 1500 is your buffer. You would need MQ. So that was Savage. That was for a real account. When you're doing a prop account, you use the other tool set. So like basically what I'm telling you at the end with that 5-day thing, that's a real futures account. That's what you'll do with your real account. Real accounts don't give you rules. Real accounts, you got to make your own rules. So how do you make your rules? Base it on your feelings. Base your rules on your feelings. Literally. It's based on you and your attachment to the money you're risking. So with a prop firm, you base your rules on their rules. They give them to you. In a real account, you're in the Wild West. You need some kind of guidance. So base it on your feelings, basically. So in your TPT, you're going to use this and then follow the conditions. Drops. So basically that. Yeah, your real account based on your feelings. And that sounds goofy, but it's actually the real answer. The last thing you want to do is feel a certain way after a loss, or you come back trading on Monday and you're scared, you're too timid to do anything in the market because you took that big of a loss. You're not going to follow your system. You're going to be scared to long, scared to short. And all of a sudden, you've basically like cut your own wings. You can't fly, and you're going to have a hard time trading in that environment. So in a real account, yeah, you got to anchor yourself somewhere. And the best way to do it is how much are you willing to lose per day? That's the easiest way to think about it. And if you're like, I don't really know how much I'm willing to lose per day. Well, then what makes you start feeling sick to your stomach? That's your limit. Okay, well, that's a good idea. So that sick to your stomach rule is a really good rule if you don't have one. Some people are like, you know what? I've got $5,000 per month I can spend on this. I can waste the whole thing. Okay, there you go. 5,000 divided by 20, right? That's $250 a day. That's your loss limit. So it's what you're willing to comfortably lose such that you are not affecting your trading performance from your feelings. And you want to make sure you aren't losing so much that you feel a certain way, which makes you deviate from strategies. It hurts your performance to feel things. Yeah, so that's basically the rule there. And that rule is pretty great. And you have to decide like where your feelings are. And everyone is totally different, man. Join the boot camp. So we give out the Zoom link in our Discord every single day. And we start it like right at market close. By the way, how many people here was resilience helpful to you today? Ladies and gentlemen. Did y'all have fun with resilience? Obviously, none of us chased along against yellow line with negative res. You guys know that? Bulls on bottom on UVXY. 100%, dude. I called it on stream. That was nice. Avoided the long. Didn't do anything. Stocks tell you the truth. And I told you guys resilience is a leading indicator. And I wasn't kidding. When all of these lights are yellow and green, resilience is perfectly as a leading indicator. If any of these lights are red, we throw resilience out. So under ideal conditions, resilience is such a game changer. Stocks went negative here, right here. The market spent 30 minutes trying to rally, and we didn't get caught in that fakeness. We found a bull trap from a mile away. Dean, feeling lost or trading at the moment, would you recommend the boot camp? If we join now, can you catch up on the 2 previous days? You can. The 2 previous days, we're talking about, the first one is a principle of basically teaching you that everything we do is based on odds and statistics. The second one is literally that spreadsheet I just went over and why position sizing is important. You can go watch the videos to catch up, but today is the most important of the boot camps because today is the liquidity maps class. So we're going right into liquidity maps. Which is the first strategy that you learn to execute on. So today is the actual important day. If you want to join the boot camp, be there today. And this one, we'll be recording it live as well and re-recording it. The old video we're going to replace with this one because now our handouts are complete and it looks better. Where's the yellow line come from? It's a technique called illiquidity pivots. It's a calculation based on our risk interval philosophy. It is really, really, really cool. And we teach you how to do this calc. The algorithm gives you the number down here in the platform. And we teach you how to find them. And I'll show you like on my chart. Here's some of them right here. It has to do with margin calls. It's a whole different thing. S&P has, like on this day, I calculated this line. There's resistance, resistance, resistance calculated from a week in advance, right? This one calculated here. Ran up, ran up, ran up. Resistance that day. S&P has one right here. They're so good. NASDAQ has one, but I think I deleted it on accident. But there's one here, and there's one at 537 as well. I don't know why I deleted it, but here. So here, 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 and here. There they are. They are so good at. That doesn't mean the market resists or sells off from them, but it's always at resistance on the way up. I'm going to show you some of them. It's incredible how predictive they are. So, for instance, this day, way back in 2024, created one that stopped right there. If you follow my mouse over to the right of the screen, you can see that when we hit that day, there was resistance that day. It doesn't mean we reverse from there, but every reversal does usually come from a yellow line from all-time highs. But you never know which one it is. You just know not to long into it when it's right on the edge for that day. It's kind of like we long to that today and then let's leave it alone. And you can see like weeks in advance, you will see that there's like pivoting off of these lines months in advance when you get to them. This one blasted through it on news and then tested it multiple days and played around it and then sold off from it. See right here? They are rock solid here. It was this day, these couple of days, and again, reject, reject, reject. There's a thing that's going on there, and again, I'll just show you, to tell you what it is, you just got to come to the boot camp, we'll teach you. But there's one right here, and there's one right here. Look at how clean that is, right? Legs down. So as markets are projecting up, they usually run that distance before they wave down. It's based on our risk interval, which is a calculation of future structure, and they'll tell you how it works. There's a whole class on it, but really, really cool technique. Like here, there's one here, and then this is the day. We're not longing there. We're going to let it retrace a couple days and pull back. So the yellow line is usually like, okay, there's resistance here, and it's got to fight its way through it. Just like here, right? We rallied up into there, and the overnight, it certainly pulled back a little bit. It doesn't mean it will reverse, but there's almost, you don't want to long into it. You want to like long to it, close out, let it test, let it support, and then take the long on the other side. You want the confirmation every step of the way. It's an exploit of something called margin buffer limit. It's a cool thing in margin requirements. Basically, market makers squeeze points. It's pretty neat. Zoom link is posted daily in the Discord. And you can catch up on the videos because they're already posted for you guys. Later, Lee. See you later. It's more of a general area. No, it's a razor sharp pivot, but the market can respond any way it wants to it. An example, today it was razor sharp on it. It doesn't mean that it has to be razor sharp, but it's going to typically oscillate plus or minus 40 points on NASDAQ or plus or minus 10 points on S&P, give or take. So this hitting it and then overshooting it is, but the pivot is here. You can see that when you get to it, it's kind of neat because we project it from lows, and it's so neat that we can project a high volume node from a low. See how cool that was? Look at this volume right here. When you break through it, there's all kind of hedging volume right at that area. See how volume picks up there? Here overnight, volume's picking up there. It's pretty cool. It predicts volume from the future, from the past. So if the market's moving at all-time highs, what's neat is pretend the S&P is like now breaking through all-time highs, and this is like months ago, and then now we're breaking through it. A yellow line as you approach it is going to be a predictable volume spike when you get to it. Something interesting is happening, projecting that far into the future. So take it, you know, with it whatever you want. There's a volume pivot there. It's up to you to decide the long or short. Usually what we do is we exit our longs there. Because this can happen, but resilience told us that the market's likely to be comfortable down in here instead. Resilience saved our asses today, didn't it, guys? Didn't chase that long, baby. What's the indicator on Thinkorswim? No, we actually created these tools, so you have to get it from our platform. We had to build our own platform to actually have these tools in it. We couldn't just put them on another platform because none of them had sophisticated code that could actually do the math. So we actually had to build our own platform. Do I leave positions open overnight? I don't. I'll have a trade overnight sometimes, but I'm in and out. I never leave it. Well, sometimes I might. If I get like a monthly hedge bounce and I get in and I'm going to bed, I'll set a stop loss and a profit target and then go to bed. But I never just like hold a position to gamble on what happens. So we don't trade unless candles reach levels. So I only trade off of something for a reason. Okay. We now open here. We gapped up on NASDAQ. We opened here. We tried to rally up. We fell back to open. I'm asking myself what happens here. We now know with high probability that with the S&P resilience being less than 0, it's a high probable thing that the S&P is going to fill its gap to the downside. So let's go to the S&P chart. Take a look at this. And S&P has already filled its gap to the downside. Okay. This is what we expected to happen with negative resilience on the S&P. NASDAQ, however, is still decently positive. So tech stocks are kind of hanging in there just a little bit. Let's take a look at some of them and see what they're doing. Nvidia still looks okay. Microsoft looks okay. Apple looks garbage. Apple's breaking. I already did Microsoft. Oops. Meta. So the question is this a long entry pivot for a return trade up? I don't think we're selling off today. S&P resilience is negative. So the problem is that we look at that as an indication that we're not going to rally past half gap. So as the white resilience is a pivot at the white line, any longing through here only goes to there and then pulls back down. So the best R&R on a trade like that is to wait for monthly hedge pressure, to long it back to the box, and then negative resilience will probably reject off of it. I'll take the trade. Remember, negative resilience doesn't mean market's crashing. It just means we're now on this side of the half gap. Remember, the stocks were already losing their momentum back here. And look how resilience is a leading indicator by like, look how many hours this is. This was at 12:02. And then an hour and 14 minutes later, the S&P fills its gap. Resilience already told you that. As stocks are doing it. It's such a powerful tool. Nobody makes leading indicators. And that's what our design here at Rocket Scooter as engineers is to make like leading indicators. Shit that really works. So it's a return pivot. So the idea is I might commit to trade on the reward to risk from here. Actually, reward to risk. This is roughly 10 points with a 10-point stop. Do I want to take the R&R on that one? And the answer is maybe I could. But boy, we already hit that already, didn't we? Okay, so next question. We hit here. Monthly resilience was there. We're hitting the same target and monthly resilience is slightly better. So it is actually a stronger pivot right now than it was earlier. Let me take one just for fun. Just for funsies. We'll take one. The R&R on this is a 1-to-1 trade. It's a commit to trade. Monthly resilience is slightly better, but it only interacts with this and rejects. So again, it can overshoot a little bit. Market's selling slightly hard. One contract, not taking a lot of risk on this at all. My trade is from here right back to there. And because resilience is negative, I'm not betting on a big reversal. I'm just betting on the chop off of monthly hedge. Now let's take a look at VIX just to double check. I am trading pretty small on this one. Just one contract. And again, just to prove, you know, I'll take a commit on this one. Just to play with it. VIX is pushing higher, slightly volatile. This is always a solid pivot. About 90% of days do not lose the orange. So that's why I like to always trade off it. That's one of my every single time trades. And 10% of days. Nice little exhaustion volume here. Let's get some green. Come on, don't crash today. I'll stop it at 10 points lower though. We want to see the volume decline. This is what we look for whenever we're trading. We want to see volume. Oh no, my platform is crashing. No. Okay, watch some ads really quick while I reset it. No platform. Oh my goodness. My platform didn't like that. Bum, 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 bum. Bum, 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 bum. You're back. Let's see if I get it. A nice little 1-to-1 trade would be fun. And then it's only to there. Let's get a little green up on this, just a little bit. Let's see if I get something good. I always, every single time, will always hit catch fish or longs, no matter what the conditions are. Always, always, every single time. Commit to trade. It's a pretty much a 1-to-1 setup. The goal is to trade it right back to the box or even half gap. So now with the conditions being the way that they are, today's high of the high of the day today, unless conditions improve, this is the high of day now. So we're going to close a little bit lower. But I still might want to grab a scalp from here to there and then assume that we stay on that path. And I'll grab that little scalp and see if I get anything good out of it. Not a terrible trade setup. Remember, we waited all day for something good. Give me something good, market. There's that exhaustion volume. Now the volume is in decline with advancing candles. That's perfect. The algorithms are still pricing this higher, which I'd love to see. Unless we get more volume coming through in declines, I'm going to be a little skeptical of this. But I'd love to see advancing candles into declining volume, which is good. That means the algos are certainly still winning in that direction. 90% of days should be above there and 10% of days should be below there. So the odds are pretty good that it does hold. It might take a little bit of overshoot. We do have some volatility here. I am just trying to trade it kind of back to there and we'll see. And then I'll call it a day. I'll lose 500 or 600 bucks if I'm wrong. And I'm pretty confident in this, so I'm gonna go take a piss. Let me know. Yell at me if it goes down. Am I losing money? Am I losing money yet? You call me a I'm a wild man. No stops. Take a leak. Leave it there. Wait, MHP isn't here. 58.92. Is that on MHP? Wait, what? Hold up. That's MHP, Stu. What are you talking about? It's MHP overnight. It's dynamic. Fastest piss in the West, dude. I haven't washed my hands. Fastest piss on the planet. The bathroom's literally like right here. Like literally. The toilet is like right here behind this. Behind the second skull. There's the first skull. There's the second skull. The bathroom is the toilet is right there. I'm in and out. Baby, look. Y'all gotta trust me on something. That's MHP. Look at that. Yeah, these are Asian session numbers that I'm trading off of. Man, I like making money. Man, I like making money. All the way up to back up. Back up, let's go. Let's go, let's go, let's go. Back up to the box. Come on. Just a clean scalp. Right back to the box. Let's go, let's go, let's go, let's go, let's go. Monthly hedge pressure, 90% chance we bounce. Come on. One red candle, then one green to bump up, and I'll close right at the box here. Right at the box. Let's go. Good one. Man, so confident he don't even need a stop loss. Well, I mean, I knew I was going to be back quick enough. And I'll have one contract on the table. So if I lost 500,000 bucks and whatever, then I would. But either case, right? That's the trade setup. And then I can just take the full risk on this if I wanted to. Lose 10 points to make roughly 10 points, right? So we'll see. Resilience is still negative right here. Monthly resilience is slightly stronger. We hit this level. Monthly resilience was at a minus 1.2. We hit the level again. It was at a 7.4. You have a lot of positive long gamma hedging here. So this is good. So again, going to chop for a little bit. Then give me one green candle. I'll close it out. Let's go. This is my 150K Tradeify straight to funded. My funded next, I'm still trying to pass and get my 6 funded accounts. I got one funded account already. I'm still trying to pass to get 6 more, or 6 total. So I did one, got funded, and I was like, oh, this is cool. Let me go get 5 more. But yeah, dude, funded next, uncapped payouts, you guys got to do it. It's funded next and end of the day drawdown king. My funded futures, end of the day drawdown king. Both of those are like best in class end of the day drawdown accounts. I love them. I looked at my funded futures today, and boy, those rules are fantastic. So, Sis, we published this orange line you see me trading on. They're published every night at about 5:30 Eastern. Right there's that test. There's that range. Look at the range here. Looking solid, looking solid. I don't want to lose this green line here. But yeah, stocks in deterioration. We're likely not to close higher today. We're likely to close inside of here, but this is probably going to chop a little bit higher before it comes down. I know better than to hold it for the rest of the day unless stocks catch up. If I get one nice little green breakout candle, one more to break this range, I'll take out profit and close it. Compare Tradeify direct to funded or funded next account compared to price. I would say they're both good depending on what you want to do. Straight to funded is going to cost you a little bit more than funded next. And funded next has uncapped payouts, but also has an eval stage. I would say check out funded next to be cheaper. Tradeify if you want to skip the eval. It's a premium price. The reason to pay Tradeify is to go a little bit harder. Pay a little bit more. All right, there's that breakout candle to break the range. Let's trap some bulls in it. Let's go to fill the gap. And let's put one more up. Let's close. And let's close. And let's close. And let's close. And let's close. All right. So let's tally up what I made today, boys. That was fun. Textbook shit all day today. Ain't fucking hard at all. This is easy. There you go. Whatever that is. Add that up. Good job. Wait for what you want. Wait. I always tell you, wait. People make it fun yesterday. Why is he not trading? Is he not chasing along? Wait for what you want. There's always going to be an opportunity. Just wait. I waited yesterday. I didn't get what I wanted. I didn't take a loss. Whatever. At the end of the day, what is this? Plus 1346 plus 1166. $8,000. I'll take it. Whatever. Textbook. Both the trades today, super textbook. Avoided buying at the high because of resilience. Took the dip on MHP only to the new high of the day because res is less than 0. We're not breaking back in the box and rallying. I just took the scalp. Let the noobs figure out what's going to happen from here, not me. Today, I'm going to celebrate. It's a pool day, I think, today. You guys think I should go to the pool today? I'm feeling super happy. And I feel a little hyper because this fucking tea has caffeine in it. I feel like I'm super charged today. Is that why I was mean to that Alice girl? I lost my patience clearly because Matt's caffeinated this morning. Probably what it was. Beautiful day. Beautiful day. Good job, guys. I'm done for the day now. I don't have to do anything else. It's a pool day today. Good deal, good deal. Okay. Yep, I grabbed this in all my accounts. It's a 90%er. It's from our playbook. It's a super simple setup. I love taking the risk at MHP. It's always a banger. I love it. Here is the pivot. Let me show it to you right here. It is MHP bounce under ideal conditions. 90% of the time, we will stay and close on this side. Resilience states that we're going to close below half gap. Monthly hedge pressure states we're going to close above monthly hedge pressure. You can see the two competitions right here. You have yellow resilience pushing up. You have white resilience pushing down from there. And that doesn't behoove you that we're trapped right in the middle of those two levels. Straight from one spot to the middle, cut it out. Was I mean? They were telling me I was narcissistic. I mean, I do have a little bit of an ego, but I have strong beliefs about, honesty and transparency when it comes to trading. So I'm going to stand by them, whether they're narcissistic or not. Maybe go. The blue haired eye jokes. I never get tired of them. The monthly 50% deal every month or just the first month? It's 50% off the first month and then 20% off every month after. So every month after the first month, it's $40 off for life. It's like a lifetime lock-in deal. So you can avoid paying $200 to the platform by taking that deal now, and it's only $160 every month. And we're always making new cool stuff for it. Right now, we're building a backtest module. You guys will be able to come in here and type in some conditions and use some AI to ask it, like, what's the probability that today closes above MHP under current conditions? The AI will go, well, probability is 82% under current conditions over the last 6 months of data, blah, 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 blah. So that's the new module we're building. Is if you guys are in the platform, you're going to get all the new stuff as we make it. So we're a smaller team. I mean, we're a big company, but we're a smaller team. We're not like $1 billion company like TradingView, but we're bootstrapping this platform. I'm paying money out of my own pocket to build it. And you guys have supported the company since we've been building this platform. Really appreciate y'all. We're trying to build new stuff as the years go by. And as we got new ideas from this team, this community, we put them into action for y'all. So how long do I usually stream? Bro, I feel like I put in like such huge hours these days, but I think it's worth it because, you guys, I'm meeting like so many new people and I'm like, the stream is growing. I'm so happy to be more present. Yeah, I've started streaming an hour before market opens and now streaming through lunch. Crazy, right? How do I get your indicators, Mo? All you do is sign up for the platform and they're automatically going to show up. And then you come to our boot camp, we'll teach you how to use it. So here's before I get out of here, y'all. Thank you, Stu, for giving those links earlier. I'm featured on Rocket Place. So you go to the Rocket Place, and then you go to here, and then you go to Marketplace. I'll give you the link. It's us. Then here. I'm done for the day. I'm out. Better to be confident than be a weak-chinned apologizer, especially your teaching. Yeah. I mean, I left to go pee without putting a stop loss. I have an edge, so I'm confident in it. As the market's falling, as it's falling, I catch the falling knife. Go take a leak. All right, y'all. See y'all at the boot camp today, 4 o'clock.
Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction shows the way. Leave the doubt and the fray. Liquidity map paints the scene. Hidden nodes like ghosts unseen. Reverse engineer to see the light. Illuminate the darkest night. Rocket scooter has got the key. Pull back curtains, let me see where institutions hide. Doubt can't live where you reside. Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads no fear. No more guesswork, no more loss. Seeing past the others cross. Institutions will be seen. Predict the flow like a machine. Rocket scooter, you've got the key. Pull back curtains, let me see where institutions hide. Doubt can't live where you reside. Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads no fear. No more guesswork, no more loss. Seeing paths the others cross. Institutions will be seen. Predict the flow like a machine. Rocket scooter, you've got the key. Pull back curtains, let me see where institutions hide. Doubt can't live where you reside.